Welcome to the Atomic Real Estate Show, Philadelphia's #1 real estate podcast and a Direct Subs production. Real estate investing is not rocket science, and on our show, we'll delve into best practices with a focus on the small things that add up over time. Please enjoy the authentic, informative, and actionable show with our host, Paul Jagelski.
This week, kind of officially last week, so that's going to be my property management company out of it.
Are you good? So you're going to run your own property management? It's good to know, because I know a lot of guys that are looking for newer property management companies.
So I'm not out to the public yet because I don't have my broker's license.
Okay.
So I can't technically service outside people. I'm doing it because I got 2 boys in the pipeline, a 9-year-old and a 5-year-old.
Yeah.
I've kind of pretty much already told them, listen, you're going to find something else other than fucking college.
Yeah.
Start working with your hands one way or another.
If you're not a brainiac, if the books aren't for you, learn a trade, learn real estate, learn something.
There was a very interesting stat that came out about a month ago with the trades, and for every 50 tradesmen that's leaving right now, 7 new ones are coming in, which it used to be 75 would come in. Like, there was too many tradesmen. Now there's going to be a huge problem coming the next 15 years.
So even that they have more numbers, it's just still simply not even close to enough.
No, because if every year you're losing 50 and every year you're only getting 7.
Oh my gosh.
Carpenters, electricians, plumbers, that's now 7 people doing the job 50 used to do. And they're saying out of that 7, only 50% of those kids are actually making it because it's hard actual work. It's labor intensive.
No joke.
So out of every 50 tradesmen we're losing per year, we're getting about 3.5 back.
That's incredible. I had no clue.
Fucking nuts, dude. So,
in this area too?
Oh, well, that was a national.
Yeah.
I don't know area. That was a national stat. So who knows where the hell they're pulling it from? It's probably all union shit too.
Yeah.
You know, they're not talking about immigrants and actual laborers, but it's still just alarming that like trade schools are going to the wayside and everyone's going to 4-year colleges. But 4-year colleges, I don't know.
I feel like they're going to the wayside a little bit more than you know.
I need 4-year colleges to do.
No, I went to Gwinnett Mercy College not knowing what I was going to do. And I obviously don't need it for real estate. I went ahead and got my own license anyway. Do I wish I could take that money back and those 4 years back? Probably.
I wish I just reinvested my money better.
It was just like extended high school. So it was nothing new that I learned there, really.
Yeah, no, I made a bunch of money and blew a shit ton more than I made, that's for sure.
Exactly.
I don't think... I say I'm like one of the last generations where college was like kind of like a good thing for us.
Yeah.
I'm about to be 40. I'm 38 years old. So
you're in my realm.
That 32, 35 like was kind of like that cutoff. Everything after that is, let's be honest, it's fucking glorified high school.
Yeah, it's not as fun anymore. It's glorified high school.
Not to mention it costs 3 times the fucking amount that I already paid for it, which was already astronomical for it.
Where did you go?
Penn State, out of state.
You were Penn State. Oh, you were out of state. Oh, man. I don't even want to know the number.
Over $100K for 4 years.
Sure, yeah.
Thankfully, and I shouldn't say thankfully, my grandparents passed right around a couple of years after I graduated. They left stuff for all the kids, so that helped a big chunk. My other set of grandparents had bought me bonds, I guess, throughout my lifetime.
Oh, wow.
So that helped me out with a big
chunk
of that.
Yeah.
So I did get past help that I never knew was actually there.
Sure.
Some really cool stuff. My wife and I made it a goal for us. We were going to pay. First thing was paying off our student loans, plain and simple.
Yeah.
We weren't going to do shit.
I'm done mine. We're working on hers. Yeah.
She literally lived at home for 4 years while we were still together because she was like, no, I'm going to pay off everything I possibly can.
Wow.
I was thankful enough that, yes, I had a couple of big chunks that helped me here, there, and then my jobs, again, I was doing the same thing. I was in restaurants, and I was just like, I work and I play at the same place, so it doesn't cost me anything.
Yeah.
We made that a goal, and then when we moved to Florida, we bought a house because we canceled our wedding.
Is that where you're from originally, Florida area?
Connecticut. We went down to Florida. We're going to have a wedding. We invited about 120, 150 people, expecting like 15 to be like, yeah, we'll fly down.
They all wanted to come.
All fucking want to come.
Of course.
I know. So we were like, well, shit, nobody's going to give us a gift because they're flying, they're getting rooms, they're paying their food, they're bringing families.
It's a couple $1,000 to get down there.
Right.
Sure.
So I looked at my wife and we started putting the spreadsheets together, spreadsheet after spreadsheet, and I got to the bottom number. I was like, "This shit's gonna cost us over $60,000, and
For an away wedding down in Florida, huh?
and we ain't gonna be able to get $1 back from it. Like, just not happening." So my parents actually came to us and were like, "We'll give you $10,000 to not have it. Put it towards a house.
Done.
I'll give you a $10,000 loan towards a house, but I will not help you with your wedding." Her parents came and were like, "We'll do better, but same thing."
Really?
So we were like,
That's a united front on the non-marriage situation. You usually do not get that.
so we called up everywhere we put deposits in, and we were like, "What the fuck can we do?" And they're like, "Well, you deposited. It's ours. So you lose it or use it." So we're like, "All right, 20-person wedding, including the officiant, including the steel drummer." That was it. Flew down our family.
That's amazing.
Flew down both families. We both had one guest, had the wedding, took those photos, sent them out to everybody else we invited and said, "Sorry, cancel the date."
That's how it goes sometimes.
Took a lot of shit for it, but
Oh,
we
of
bought a
course.
house, and that actually ended up turning us into real estate.
Really?
That was our
That's quite a story.
awakening into, you can make some money off of this. We put money into it. We bought a house. 3 years later, we moved back to Pennsylvania, flipped it basically.
Sure.
Short-term flip. Didn't know what the fuck we were doing. Didn't think about it that way. Came back here, took the money, bought a row home up here, 10 doors down from my brother-in-law, because I was like, "I'm going to buy this shit and put it into my portfolio, or you guys can take it."
Or you got, yeah.
And we're like, "Oh, thanks, buddy. You know, like, this is really helping us out." And lived there for about 3 years, 2 years, looking for our forever home. Consistently being like, we're not staying there. And it took us like 2.5 years. And when it went to sell, my brother was like, "Dude, you're going to get your ass killed on the sale. Don't do it. Hold it for a year. I'll help you rent it. If there's any problems, I live up the street. I'll take care of it for you. After the year, reevaluate and go from there." So that first year went by and I did my taxes. I was like, "Holy fuck balls! This is awesome!
Yeah.
I actually make money. I put it towards this mortgage. And
Yeah, you can offset everything.
these tenants are awesome. They want to renew. Yeah, fuck that, dude."
Here we go. Real estate.
We're ready to go. So then I called Sean. I was like, "Sean," because he helped us buy the Forever House through Brian, who recommended him. I was like, "Dude, I need more of these. This is fucking awesome. I'm now addicted." And he's like, "Yeah, you're putting like minimum money down. You're doing inspections. You're getting financing. Like, you're really just not good."
So you're not a good qualified investor candidate, of course.
So
yeah.
over the next couple of years, I tried to figure out what he meant by that. Read everything I could. I was working in New York, driving back and forth, so every book on tape I could fucking put my ears to,
Wow.
just went to it. Realized I was like, "Shit, dude, this is awesome." But it
So
took
you had no real estate background at all?
nothing. So I kept talking to him. We kept analyzing. He's like, "Dude, just fucking quit your job. Like, quit, join our team, and shut the fuck up," basically. He didn't say those words.
I love, yeah, but I mean,
But that's how I took
yeah,
it. Like, he was much more nicer about it.
Well, that's incredible.
But that's how I took it. And then, yeah, I looked at my wife and was like, "Hey, do you think we can do this? Let's make a 3-year plan." She was on board for a 3-year plan. If it didn't work, fucking cut it, back to the restaurant.
Yeah.
If it worked, we reevaluate, do another 3-year plan, and so forth. So I told you, we're on our 4th year. So we reevaluated last year. We got 2 duplexes and a single family during that time.
That's great.
I've literally, anything that I have been able to make for real estate, I put towards either investment or retirement. Basically the same thing in my book. And my wife took a couple promotions during that time because I was able to be with the kids.
She in the corporate world herself?
She is.
Okay, that's good.
Our goal is to get her out, but right now her W-2, her insurance, and all that kind of shit.
Yeah, of course. My wife's the same way.
Her income,
Yeah.
all that kind of crap really helps.
Yeah,
and
when
she's
a
not.
market- in a
She's
market
not upset.
like in a market like this, when you actually
Yeah.
sure.
And she's not burnt out. She's not dead yet. She's still like, this is a fun game, and look how much money I can make though.
Yeah. Keep on doing it.
Yeah. So anything she can do, I 100% support. If that means I have to cancel XYZ, I don't fucking care. My life is based around her W-2, and then I'll do the kids.
It's interesting. We're the same exact structure.
But it's honestly for 4 years now, it's fucking work.
Yeah. Oh yeah.
I mean, I went from having panic attacks from stress to now all of a sudden, like, I love fucking life. I get to interview
I was just
people.
going to say, you're having a blast. This is amazing. Yeah.
Like, I get to build a tree set in my backyard with Lowe's fucking discounted. They were going to throw out wood. And, like,
I love it.
So yeah, CJ approached me about this and was like, "Listen, dude, you have these random conversations with people whenever I'm around about real estate. You clearly have an itch about knowledge for it. Would you want to be interested in a podcast? I was like, well, what do you mean? He's like, well, you'd be the face. So you have to be comfortable with like seeing yourself talking and so forth. And that was the hard part for me. But once you're like, I can get past that, it's more about this. Like,
and you're probably learning it. I mean, you said books on tape and everything. You probably take bits and pieces from every single interview 100%. And build it into your business and personal life.
100%.
Yeah.
And that's why we started doing it, was we sat there and we were like, listen, if we could benefit from this, I mean, somebody else can too.
Sure.
So why just have one-on-one conversations? Why not have one-on-1.1 where you can host that somewhere else? And somebody else might be able to learn a little nugget, a little atom-sized piece of information that they could take back. When he pitched it that way, I was just like, I'm fucking sold.
Yeah. I mean, and it's all things that are now relevant to the market, the moving market. I'm telling you, I see it on Instagram and I just kind of get caught and then I get down the rabbit hole. Right?
Yep. Well, and so that's the other thing. Nobody talks about Philadelphia.
No one.
Florida, fucking New York, Jersey even gets some fucking love out of it. Baltimore gets some fucking love out of it.
Why are we getting, I'm licensed in 48 states to write, but again, why am I chasing business out of state? Why am I not doing it in my own backyard?
Right.
So.
And we lost a ranking this year. We're now the number 6 largest city.
Oh, is it 6?
We lost.
Yeah.
We lost people, and we have not gotten those people back.
I guess what, Phoenix, or was it? Yeah, Phoenix, Arizona.
I think it was Phoenix.
Yeah, I believe so. Yeah, my sister lost from there.
Yeah, because we jumped, we flip-flopped.
Yeah.
But yeah, like, what the fuck, dude? Like, we don't need to be losing people. We need to be bringing
them in. Yeah. There's plenty of development opportunities around here now.
And that's
neighborhoods are turning over everywhere. So.
No.
Yeah.
So that's kind of like what it is. And, I mean, this is literally the conversation. I mean, this is all it is. It's bullshitting back.
What we do every day anyway.
Yeah.
Right? It's what we live in. So.
100%.
Yeah.
Like, and then, but it's that, like, you do this all day, but you only get to do it with clients. And there's people who are so scared to hear this information or even reach out to hear this information, so they don't. And I know it because that was me.
Yeah.
That was me for fucking 4 years, sitting there and being like,
what do I do? Where do I go? How do I start? Point me in the direction and push me.
No.
Yeah.
So that's my 4 years in a nutshell of about 15 minutes.
It's impressive because it seems like you've been in it a lot longer. But now I guess this pod probably helps you with all that.
It helps me analyze it, understand it. I talk to people obviously much smarter than I fucking am. And yeah, I get to hear their stuff and then go back and put it into practice because I got the license, so I can go on MLS, I can check things out and be like, really, does those numbers work in this area? Shit, those numbers work in this area. Like, holy fuck, how does he do that? To me, and I know this sounds weird, but the woman force that's been coming through real estate is phenomenal.
Oh, I agree.
Their fucking attention to detail, their trendiness,
kicks our ass.
Their ability to stay way under fucking budget. Like, here's our budget, we go over. Here's their budget, and they save, and it looks nicer.
Yeah. Their finishes are incredible. Any one of them that picks the designs and things like that run laps around me at this point.
The savviness out of it.
I can't even do it anymore. I started doing flips because I was in the restaurant business as well.
Oh, no shit.
Attended bar for about 15 years. And basically, took my cash after college and said, where am I off to now? One of the guys came in, I said, driving a nice car. I said, can you put me on? What are you doing? Mortgages. I said, I don't know about that. 14 years later, here I am.
Oh shit! So it was literally right out.
Yeah, I mean, probably 2 or 3 years right out of college, and my degree I'm looking at, and doesn't do anything, right? I automatically thought I'd get a job and go into the corporate world, make 6 figures, and that's nice smack in the face saying, hey, it doesn't work this way.
Shit, dude. So you've been 1099 forever.
So, well, the way we get paid, it's 100% commission W-2. So yeah. Through certain different lenders or brokerages,
Stay hungry.
Yeah, all the time. I mean, so that's kind of how I chose to work. It was like, well, do you do ops or do you do sales? And I was already in sales. So it's like, whether it only be at the ground level bartending, you're in sales. You make what you can make.
Thank you. It's no different.
It's no different. It's just got a different job title that everybody thinks is an approachable job. That's sales at its purest form.
Dude, I tell investors all the time, we're no different than bartenders.
No different.
We want the money. We get the money. We go, ooh, shiny objects. Let's go buy them. And then we go, fuck, we need more money.
And what are you going to do? You got to get back out. You got to speak with people. You got to be nice. Yep. You got to learn.
Well, So you started with flips. Still doing flips?
I did. No, the margins for me, no. Clearly, the margins are not there anymore, and the field is, full of sharks, right? And if you don't have your dedicated crews, that's why I lean on CJ quite a bit, right? With direct subs, it's like, what an amazing program for people that have no idea. One, they don't know licensed contractors. They know no subs. So he built this, and that's kind of how we reconnected. We were always friendly. But through real estate, I'm like, what a brilliant idea, because I was doing the same thing as he created direct subs. And I'm like, this is genius, because I ran into problems like, how can I have a dumpster here? Something as simple as a dumpster.
Yep. Who do I call?
Yeah.
How do I get it marked off?
Windows, am I going to get them myself, or is somebody else getting them? Like, those
What's the standard size? What's enough?
Exactly.
How am I measuring this? Do I measure it 3/4 in? Do I measure the exact?
I'm putting bay windows in houses in Fishtown. Like, what am I doing here? So, yeah, I mean, he built it, and we chat. We have season tickets to the Phillies game, so we discuss, sports, family, real estate all the time.
That's awesome.
So it's pretty great. Yeah.
So you're a user of direct subs still.
I am going to be if I ever get back into the flip game. Right now, I am just doing rent or buy and holds.
Okay.
Single family rentals.
Cool.
I love the local areas. Again, I'm a Philadelphia guy. 35 years ago. So
I heard you were born in.
I was born in Manayunk, raised in Manayunk.
I got some questions about that.
Yeah, so that's it, man. And I like to invest where I live and work. So
that's awesome.
That's why I'm here. So,
that's awesome.
Yeah.
So you've seen Manayunk and Roxborough, and I know the last couple of years everybody has seen it.
But I really saw it. I mean, when it was nothing, when it was just regular school, Catholic church town with 5 different parishes.
All single families.
All single family, no development going on, just a small
parking
community.
anywhere and everywhere.
Everywhere.
Well,
and
you had to go
to see what it is today, it's almost unrecognizable to me.
I'm sure.
To be quite honest, because what we grew up, it's kind of not there, and it's been reinvented. Some good, some for me, obviously bad.
Are you still living there right now?
I am not. I'm in the Conshohocken section. I am my second kid, and I went to the closest boundary line of Philadelphia. And I feel like I'm still far away. The first thing I did when I bought the house, I mapped from my new house to where my old house was, and I said, it's 8 minutes away here. And she said, are you crazy? We just spent this much money on a house, and you're looking back at the old directions to our old house. What are you going down there for? Like, well, I work down there, I live down there, I play down there. So that's what it is. Yeah.
That's awesome.
Yeah, crazy.
We looked at Conchi. I love Conchi. We couldn't afford it at the time when we were going. Because I had one big rule, and you're going to understand what I say as soon as I say this. I needed a pool.
It makes a lot of sense to me, because that's what I thought the suburbs just meant. You have the option to get a pool.
I was moving back from Florida, so I needed the pool.
Yeah.
The Jersey Shore to me is not an ocean. It is not acceptable swimming water. So I'm not a big Jersey Shore fan. I'm sorry for all those that are there.
No, that's fine. That's fine.
I needed that blue water where I could see my toes moving back from Florida.
Sure.
Never owned a pool, didn't know anything about them, but that was my one thing. And when we looked at Conchi, all those price tags were like almost double. So it was like,
so you were just in the market recently, a couple of years back, right?
We bought ours, just 5 years back. Not even, 4.5 years back.
That's where we were, 4.5 years ago. March 15th of 19 was the last time I bought.
We were, somewhere right around there. We're in 23, right. End of 17, beginning of 18.
So you got in before the boom too.
Yes.
And you're Orland area.
Yes.
So which has exploded.
Oh God, dude. When we bought our house, and again, I knew nothing about real estate at this time, which I fucking wish I did. But anyway, I still love my house. But I looked at it, and we technically paid $1,000 over asking just because the sellers wanted to have a win. And
funny, I paid $2,500 over asking, it's $600.
Yeah.
Just to sweeten it.
Yep.
She said to me, my agent goes, can we come up a little bit? I said, I'm giving them full ask, quick close, no inspections, 20% down, perfect credit, 2 borrowers. We wrote notes. I said, I'm boarding a plane to the Bahamas right now. I'll sweeten the pot with $2,500. I don't know if that's a kick in the face. I don't know what it is, but it's something to just say, hey, all right, I'll play ball a little bit. I mean, at that time, we were overextended. We were looking in the 400 or 500 range. It's like, which was still high then.
Yeah, we were looking. So our real budget, according to mortgage, was right around 500. And I was like, "Fuck that!
That's a $500,000 house. It's too high."
No how. We were looking 375 to maybe if we wanted to push 425. This house came on the market. It was 430. So we're like, it's right there. It's still under, but it's a little bit past our pass. Let's go look at it. Loved it. put an offer in within 6 hours of it being on the market. Sean wrote it all up. They come back to us and go, if you give us over asking, we accept. Sean found over asking as 1,000. We did 1,000. They accept.
Brilliant.
Done. So all they wanted was to say we
Just
got
to get
over
the W,
asking.
that's it.
And so we did. The other W that they got was we had to have a 6-month close because they wanted to have the summer, and we're like, we're gonna have it for 30 fucking years. Have one last summer.
Like, yeah. And probably allowed to get your ducks in a row, really kind of understand
Really
what you were jumping into. Yeah.
Made it really hard to not buy furniture and shit like that, though, because that was an extended time.
Do not screw up in 6 months. Yeah. Do not buy anything.
Yeah. So that was a tough one.
Yeah.
But I looked at my wife and I was like, you do realize we just fucking overpaid at the top of a fucking market as it's climbing. It's gonna come down. We screwed ourselves. And then fast forward.
How wrong were you?
It's so very wrong. And now it's funny because now I analyze freaking real estate on a daily basis out of it.
Now you can't get it out of your head.
Yeah, we drive by a house and I'm like, you idiot.
Well, and that comes back to the point where everyone, they think it's sales pitchy of us. Always say, well, when's the right time to buy? Well, answer's clearly always, like right away. Don't wait, because the people that are buying now are going to be saying the same. There's going to be saying it in 5 years. The same thing. Man, we thought we overpaid. Rates were too high. Market was overinflated.
Yep.
How do we know this?
Yep.
We're just reading forecasts and reiterating things we hear on Instagram, and we don't know.
No. Nobody's got the crystal ball. Nobody really knows where it's going to go anyway. All I do know is exactly what you said. Every person we ever talk to about investment always say, I wish earlier.
I did it earlier. It's only constant across the board.
Earlier.
Yep.
More earlier.
Wish I knew more earlier and did it earlier.
Nope. And yeah, dude, I mean, it was funny because I was talking to my brother-in-law the other day. He's like, I don't get these numbers. And he's got a good portfolio in front of him.
Sure.
He's been doing this for 15 years out of it.
Oh, great.
And I looked at him and was like, dude, you do realize when you came into the game, the old guys that you were buying from were going, I don't understand how you're going to do this. Good luck. Numbers don't make sense.
They were cashing out because they thought it was going down.
Yeah. And now you're the old guy going, I don't know how these young kids are going to do it.
And guess what? There's 100 investors on the sideline saying, please unload your portfolio to me.
Yep.
Yeah, absolutely.
So we are officially the old guys. Now, unfortunately, COVID, it usually 10, 15 years to become the old guy. COVID just made it a little bit faster.
That's it. Yeah.
So the numbers, they're tight on my numbers. They're tight for me. But they're there. They're working. You can make a deal work. You go to sellers, talk to them, ask for concessions.
Sure.
I'm sure
big deal right now. Yeah,
that's
one of the house hacks that's happening more or less, right? Either you work and the dialogue works both ways and say, hey, well, we want to buy it, but we're tight on, most people are tight on cash to close. Correct. Right? So even that 2% on the investment side of things, that helps, right? FHA loans, especially if you're buying duplexes, I mean, that's the number one house hack, right? And you're starting to finally see that now that FHA is becoming sexy again. Yeah. So, they reduced the MIP, the 3.5% down. You only have to live in it for 1 year.
That's it?
Yeah. So you only have to live that for a year and then you move on.
So I heard an interesting life hack out of that one, living in it. He owned multiple properties. That one unit was being renovated for a year. Mail was getting sent there. Just wasn't sleeping there for that year.
Wow.
And I was like, you son of a bitch.
It's a gray area for us, I'm sure.
Isn't it though? Like, because it has the two kitchens. You're getting your mail there. You're paying the bills. You are technically living there. You're just not
physically sleeping there. Yeah.
But he's like, dude, I'm there every day. I'm doing the renovation. That's me.
I mean, if it's technically your primary residence, and you're not really primary somewhere else, you could be renting anywhere. We would consider that.
Yeah.
Sure.
So he's like, yeah, I mean, that was one way that I've been able to kind of scale. He was doing it as a 2-year thing because he would do each unit.
Sure.
And then he was technically renting off of the side. Like,
incredible.
You're hilarious. But
I guess legal, right?
Yeah. The bills are being sent there. He's paying the electric, he's paying the water, he's paying the cable, he's paying the internet.
Your photo ID reads that address.
100%.
So, yeah. Your taxes are being filed there. So.
Yeah. So I was just like, you
primary, there you go.
Smart little man out of it. And yeah, because he was finding that FHAs.
Sure.
And yeah, FHAs right now, they're really sexy.
Yeah, just especially definitely with the loan, the LOPAs that they just implemented on May 1, right? Anywhere from 6 680 FICO to 760 FICO, you're kind of being penalized now. So if you're even in that range, that lower 720 range, FHA probably prices out better interest rate, mortgage insurance, the entry point's less. The only thing that our job is, we have to re-educate a lot of these agents that FHA is not a bad loan. I don't know what the stigma is behind it, but
it's only 3.5% down.
They're like the appraisal. All they know is the handrail. I'm going to go every time I submit an offer. I'm just going to drop a handrail off at the damn place because it's like, is that all you're worried about? Is a handrail?
One GFI.
Yeah.
Drop a GFI.
GFI and a handrail.
Don't find a GFI.
Like, I'll screw it in for you. Please accept our offer. And I have to call plenty of listing sides and say, we're only doing this straight out of it's a better product.
Yeah.
Better.
Well, and also talk to me about buy down because the seller could 2%.
The 2%, yeah.
Tell me about that buy down because I've been trying to work these numbers.
Yes.
And I know they make sense, but I don't understand them.
So the 2-1 buy down, and it depends on company who you work with. So generally, it's the selling side can pay, the agent or the seller or the builder can pay down in 2 years. So for example, if you're at 7%, first year you're in a 5%, second year you're in a 6%, and then you revert back to the 7%. But the thought process is within that 24 months, with the rates inflated the way they are, you're going to refinance out of there in that next 24 months.
Absolutely.
Even if you have to stay in there 3 years,
Yep.
and you're sitting back there at the rate you were initially quoted anyway.
Yep.
The other benefit of that is you get the portion of the money back. Say if the rates do drop at end of 24, and you put $10,000 up to buy that rate down, and you've only used half of that, that $5,000 doesn't go away. That's your money. So you get that money back. Yeah,
that's awesome.
You either put it towards that refinance or you can get it back yourself whenever you get out of that term. So that's a real thing. Yeah. And now some companies are offering, and we're cooking up on as well, where you can do it through the company. The buyer can actually buy it down. Because if you were to buy down your rate 2 points now, it's going to cost a lot more than 2% or roughly 2%, right? It's going to cost 4, 5, 6%.
Yeah.
I mean, most mortgages aren't even pricing out at par, or rates aren't pricing out at par anymore. They're costing points to get in there. So, but more companies now are starting to let the buyer do the 2-1 buy down.
Dang.
Yeah, so pretty sweet.
That is.
Yeah.
I mean, you're talking hundreds of dollars per month rather than just an upfront couple grand.
Just $400,000. You're probably talking anywhere from $500 to $700 the first year or two, and then it goes down to probably about half of that, $300-400, and then you go back to initially what you thought. But again, the whole thought process of that is now refinance out, and then you're getting that introductory rate anyway.
It's kind of cool. It's almost like an investor like mini class because I mean, for myself, I like to hold. I'm going to hold for 20, 30 years. That's my plan.
Sure.
Every 5 to 7 refinance. Take that money out, take that equity out, and get it working at a higher rate somewhere else.
Yeah.
If that means that property goes from making $1,000 a month to $250 a month, it's fine because now there's a second property that's actually
supplementing that income.
Correct. Sure. So you're getting that extra, and this is a nice little way to teach them. Like, listen, you don't have to be stuck with your mortgage rate forever.
And that's what it is, right? And now you hear it more and more, and it becomes more popular, right? Marry the house, date the rate, right?
I like that. I haven't heard that.
If you have not heard it,
I have not.
So the marry the house, date the rate. That's the whole thing, right? And we're trying to put a spin on it because the consumer confidence when rates are high like this, and you're a first-time home buyer, you can only get fixated on that number, and that's all they hear in the media. That's all they read all day. Where the rates are at, what the Fed's doing, even though they're not directly correlated, but that's another thing. So that's the battles the challenges we face as loan officers and real estate agents as well.
Are you doing a lot of refinances right now?
The only time you're seeing refinances right now are if people are really jammed up and they have that equity, which most people do. But if you use it as a tool and you can show them the debt consolidation and your actual cash flow compared to your monthly budget, you're seeing a lot of that. People that take the blended rate and say, hey, well, my credit cards are 29%, and this is 20%. My mortgage is 3%, and I don't want to touch it. Most people don't want to touch it, right? But if you take a home equity line of credit out to pay all those other things off, well, now you're paying interest only, and that's an inflated rate, right? That's a variable rate on your HELOC. So it's moving around, it's interest only, and you're going to get comfortable in the $200 payment. Right?
Yep.
Paying interest only, you're going to look in 3 years and say, well, that balance didn't move $1. So that's where we're kind of running into. So if you're seeing refinances paying off home equity lines of credit, you're seeing debt consolidation. There's no real rate of return, right? Because 80% of the nation has a 4% or under interest rate, which is what we're facing right now.
Yeah, I'm part of that in a couple of my houses that I refinanced during that time.
Yeah.
And it was one of those at the time. It looked great, got me a third property out of it, and now I'm sitting there. Fast forward 2 years, I'm like, that's equity I don't know if I ever want to touch again right now because it's almost lost equity at this rate.
Sure.
But I have to stick to my goals, stick to my plans, stick to the tried true methods. 5 to 7 years. If it's not there, go to 6. If it's not there, go to 7. But yeah, you also mentioned HELOCs, which is another one right now that's coming up as a house hack.
Sure.
It's HELOCing and buying the investment property.
Or even your new primary residence.
Yes.
Really, because
Talk to me about this one. I just read about this one.
So, and CJ and I were talking about this the other day. So everybody that bought in these unicorn years, right, when rates were 2 and 3 and 4%, didn't think they were going to become real estate investors, right? They thought it was their first home, then they would take the proceeds traditionally and move to your forever home, or maybe even your second home. Now it's like, well, I have a 2.5% interest rate. I see the rents out here. I see what my neighbors are paying for in rent. How can I keep my asset, keep the equity that I gained here in these unicorn years, but how can I buy where I really want to be at, right? Because life gets in the way, right? Your new children, family, health, who knows, whatever it is. You outgrow your house and you want to move on to something else. Well, the way to do it, because you can't really cash out refi because you'll lose the benefit of that rate, that 3% rate. But what you can do is you can pull from that equity, right, from your departing residence and put it as a down payment towards your new home. And we're seeing more and more of that. Obviously there's procedures and you want to, if you're signing a home equity line of credit saying it's your primary residence, kind of make sure it lines up. But I say to everyone when they purchase, whether it be a primary or investment, talk to your local credit union, talk to your bank, talk to me, and we can get you a home equity line of credit. Keep it at 0. Doesn't matter.
Because you don't pay it until you use it.
You don't pay it until you use it. So, and you won't lose it unless you close down that lien position. So why not just on any house you have? If you have equity and interest on every single one of my properties, I take out a $100,000 line just to have it, rainy day fund. And if an opportunity presents itself in real estate, sure. If you get jammed up on bills wise, I mean, we're commission-based sales guys. If we don't sell and you got to pay bills, guess where you can take from? You don't want to take from the home equity line, but you can. And now you're not selling off your asset. You can pay your bills, stay afloat, and fight.
Fucking brilliant.
That's it. So that's what I just got off the phone with a client earlier today. They wanted to move out of Roxborough. Their family's growing. They have $150,000 in equity and a 3% rate. The rent is $2,500. Their mortgage payment is $1,700. You use 75% of that $2,500.
Yes, sir.
So you're actually cash flowing while pulling the HELOC and have your new tenant now pay your mortgage, your HELOC, and your cash flowing still.
Oh, and
you look better on paper.
Yeah, I was gonna say.
And you're better on paper. You're actually stronger on paper.
Damn. So dude, that's a great insight for anybody who currently owns and is looking to get into investing, but not fully like quitting my job out of it. Like,
sure.
This is a nice little step right into it. Feel it, because as you say, all right, you put a tenant in there. A year later, it doesn't work. Sell it.
What's the worst thing you can get? Now you can sell it.
Right. And
now the rates are down in the 4s and 5s and 6s. The market's flooded again. The appreciation gains more, so you make more money.
No.
I think it's a can't-lose situation, really.
Dude, and that's great advice, too. I mean, as an investor myself, I never even thought about going to just my investment properties and taking the HELOC. I always just looked at my primaries. Yeah,
throw it out. They'll let you borrow up to 75% generally on your investment property. So if you have the equity there, you probably already put down 20 or 25%, depending on if you're out of that FHA range. So you already have the equity there. And
dude, as you, in a rainy day, God forbid, a good deal comes across your board. Now you're not sitting there trying to scrap up some cash and make it look good.
And you don't have to sell one thing. You don't have to make a contingent. You don't have to run it in any gimmicky, buy now, sell later products. You just pull right there. And it's a cash offer. That's awesome. That's it. It's great. Great advice. What else you got for me? Buying. Come on. What are clients doing right now? Right now. So what is happening in the market that you probably haven't heard about? 4 or 5 years ago, what was not really in the market is these non-QM loans, these non-qualified mortgage loans. They're called DSCR loans, and You hear people say, hey, I want to buy a loan, but I want to buy property, but I don't want to put it in my personal name, right? They don't want it to touch their primary residence. They don't want it touching their business. And there's plenty of ways around it, right?
Yep.
Establish an LLC. You can establish it in PA, but there's even better places to establish it in. You can go to Wyoming, you can go to Nevada, you can go to Delaware, where there's anonymity rules, where it really can't trace back to you per se.
Yep. So
there's better layers of protection in different states. Plus, they move quicker. The point of entry is lower. Like mine are all out of Wyoming.
Okay, so you have done these too.
So my holding company is in PA, but everything else is based out of Wyoming. All my LLCs are out of Wyoming. Yeah,
that's awesome.
So because now they don't talk to one another, they don't touch one another.
I'm just learning about this. This is why I got to take
credit
because I just read a tax book about all this.
Yeah,
and in Wyoming,
it's interesting stuff. And I
in Delaware were the two that
and Nevada as well. And like you said earlier, to your point, I listen to smarter people. I'm no expert in LLCs, any of that, but I listen to guys that do this. I watch these house hacks all the time, and that's kind of how I built mine as well.
That's
so
awesome.
These non-qualified mortgages right now aren't based off your income, right? They're not your W-2 income. They're not your self-employed income, which most investors are, right? They're self-employed, which it's a banking nightmare. You're going to torture your client. You're going to go in with a friend, and you're going to probably come out with an enemy unless you're an expert at analyzing self-employed business owners. So what they do is these debt service ratio loans flow. You qualify based off the cash flow of the property, and it's as simple as that. You get a lease agreement from the selling side. If the cash flow is 1-to-1, if your mortgage payment's $2,000 and your rent's $2,100, you're going to qualify. So it's not based off your W-2, anything like that. Credit score still matters, obviously, credit worthiness, but these loans help because as credit worthy, the extension of credit tightens up, these loans help.
Yes, they do.
Because a lot of people that have the $600,000, $700,000, $800,000 home simply cannot qualify from a debt to income standpoint anymore.
Nope.
And in the market, these were non-existent 3, 4, 5 years ago.
I didn't know that.
Yeah, they said the CEO of our company, Eric, he comes out with a monthly mortgage update each month. 54% of your investment purchases in the jumbo ring, there was 54% were conventional and jumbo was your investment buyer. Now that shrank down to basically nothing. 4% is QM loans, non-QM loans. So you're going to see they think this is the wave. This is the wave coming forward because, as the cost of living hasn't kept up with real estate, well, how can people qualify?
And I will tell you right now, what I'm looking for is I'm trying to get those exact loans and BRRs to merge and marry. That's kind of
now. How would that? How do you see that taking place?
So I got you a little 2-bedroom. Say it's $125,000. I can rent it for $1,350 out of it. So you're going to sit there and as a bank say that's good. Now, don't necessarily. Maybe their lease is up in 3 months, 4 months. I get in there, renovate it. There's some space in the back. I turn to a bedroom. Now it's a 3-bedroom rather than the 2. I could put a half bathroom in. Now I brought that equity up, finish off the basement, bring that in. Now my rent's not $1,350 anymore. Now it's looking at more like $1,800, $1,900. And now I can go back to the bank, refinance out. There's your BRR out of it, raise it up. And I only put that minimum 20%, 25% down that I needed to in the beginning for that loan, but that was at a lower price.
Sure.
So now I've kind of inflated it up to here. The problem is as you know, there's a lot of competition out there for anything that is priced for a BRR.
It just is. It's the reality of the situation.
Between little guys like me, mom and pop people that want to jump into it, and the huge conglomerates that are waiting for it just to hit the market because they've already talked to them and their number was denied.
Oh, sure. Of course.
So that's been the hard part this year for me. I know it's been a hard part for a lot of investors. That's why I'm trying to find these little fun facts of how you can do it because these loans they're helping us.
They are. They're helping the middle to first-time investor
Yes.
kind of get off the sidelines.
Yes, they are.
The entry point, again, as we discussed earlier, like the FHA is for really when you're kind of limited to the max on funds, right?
Yep.
Because you can get that 6% seller concession or up to 6%. To help you get in there. But when you're really in that 20 to 25% range, and most banks want you in 25% now. 20 is not really pricing out well.
You better know your banker pretty well.
Exactly.
They better be coming to your barbecue every Sunday.
Exactly. And they're still going to be like, hey, it's really 22%, so you may as well just go 25%, right? Save on the discount points, go 25%, get the better interest rate, because then you probably just bought yourself another year or two to
Yep.
pull off the refi anyway.
Yep.
So, and your cash flow better. I know it's hard, coming up with the extra 5% is hard because you can't really introduce gifts on the conventional side when you're buying investments, which most people make that mistake. Hey, I can buy investments. Mom or dad are going to give me X amount of money, but they're not.
Yeah, I got denied that once.
Yeah. So you got to get that money in the bank. You got to make sure it's seasoned properly. 2 months or longer.
Yeah.
But that's kind of where the investment world is kind of keeping us afloat right now, right? When inventory's squeezed like this, a lot of people have found their forever homes. A lot of people say, over my dead body, you'll get my 2 or 3% rate. And it's just the reality of it. There's some people that will never sell.
Well, and then you've got the older generation who's like, you're not putting me in a fucking home. I own my home.
I own my home, and I'll stay there until it falls down on my head. Trust me, I know quite a bit of people from the old neighborhood that are that way. Because they're sitting on a gold mine, but they won't sell it because, what's the alternative?
They don't want to go into a home. They don't want to have to then lose their gold mine to somebody else's. No, I have insurance. They can come to my house, and that is covered by Medicare.
And I must say, not from a human perspective, I agree with them.
Oh, absolutely.
I wouldn't be going anywhere either. I'll buy specific properties just for life's event down the road that I'll end up in one of them if everything hits the fan.
Oh.
Trust me.
No, and then again, that's not to say that there's not good ones out there. Florida's doing some really cool things with old malls. They're turning them into kind of communities where, the Sears is turned into 4 condos, but the movie theater's still there, and the eye doctor's still there. And so, you can
They're making use of these commercial spaces really well. I just had coffee this morning in Rittenhouse with a commercial real estate agent, and he's saying the same thing. These old unoccupied units all throughout the city, well, now they have to get creative, right?
Yep.
You better make these 4 or 5 units above it upscale condos to keep the revolving door, unfortunately, in the commercial space paid. Because that's what it is. These small guys get in there and they say, $10,000 a month is not that bad. Well, you better be making a lot of money to be paying a $10,000 bill every month.
Yes.
So it's a revolving door in this commercial space. And now these agents have really figured out, hey, you better put money into that project. Soup up these condos, soup up these living situations to supplement the commercial space.
And that's what I'm actually liking, though.
Yeah.
Because it's one of the things that I almost wish, I don't know if I want to say it out loud, but I almost wish Maniac and Roxborough made a lot of those developments put more commercial space in.
Oh, you're saying everything anybody's thinking in that neighborhood.
I know. But there's good and bad to it. Because if you can't get people in there, then it's empty. And if it's empty, that's not a good look. Because then people don't want to live above it.
Rents will come down. So it's a double-edged sword, right?
Correct.
Yeah.
It's very, very tight.
Sure.
If they're going to do something like that, I kind of wish they got rid of one like the supermarkets and did that up with some little spaces underneath it. That would have been...
Well, right next door, too. Yeah, right next door.
Had a great opportunity for it.
Yeah.
So I personally think commercial space is going to be a huge boom coming up because right now everybody ran from it. Landlords are still trying to make money off of it some way or another, but they're sitting. So eventually they're going to sit there and be like, time to unload. And it's going to be those creative people that are going to sit there and be like, ooh.
You know who it's going to be? Those people that didn't go to college for that 4 years that we started off the conversation with, right?
Yep.
These small business owners, these gym owners, these stylists, these small breweries. I mean, these are the people, the new
They're
wave
not
of
going to have
entrepreneurs.
$100,000 in debt.
I mean, they're brewing beer in their basement. So, I mean, these guys don't have, the capital to really buy their own space anyway. So they're going to rent it, right?
Yep.
And they're going to have no debt to go in there so they can finance, anything they need for their business. So they're set up. So
I just talked to, there's a little strip mall near me that's up for sale. And so I went to go talk to a couple of little tenants in there without them knowing who I was or anything like that. Just asking them questions. And one of them, he just opened up. He's 22 years old. He's doing it all himself. It's all his own hours, everything else. I asked him his rent. His rent's only $2,000 a month. And he's like, dude, I could either go to college and pay $20,000, $30,000, $40,000 basically a month when it comes down to food, costs, books, living, school expenses, and all that, or I could try and start a business. And so I tried to start a business. And this is it. I got a couple of years. I took all my savings, asked for a couple of friends and family loans. And right now, I was like, all right, so how long? He's like, it's been 2 years. I was like, shit, dude, you made it through COVID. You were 20 years old and you made it through COVID.
that's a success in itself, right?
You're done.
Yeah.
Like, good for you. Now look to go to the expansions. I was like, go get vending machines and line this wall with vending machines.
Yeah.
Go get an ATM machine, put it right there. And this kid's eyes just went, and I was like, dude, you already did it. You did the toughest
You got
part.
through the worst part of it all.
You decided not this, but this, and you lived.
It's real easy to go the other
Good.
way and say, hey, I'm going to take the safe one here.
Yep.
And then they're having the conversation later and saying, man, I wish I started that.
Kid's 22 years old, got no debt, paid off all of his little kids,
Love it.
people back, and he's got a small business.
The American dream, really, in a nutshell.
Absolutely.
Yeah.
Fast forward in 15 years, I guarantee you that kid's got 7-Elevens up and down the freaking strip. Whatever he wants
Whatever
to get
it is.
into, he's going to see it and he's just going to go.
He's got enough time to fall flat on his face multiple times and get back up.
100%.
Because, again, he has no debt. He's already been in the game. So
And you don't have no government
I love
knocking
it.
on him and be like, yo, you owe me 30% after today. You owe me another 30% after tomorrow.
exactly.
No, it's his debts, it's his time, and it's his inventory. You showed me pictures in the beginning. His inventory was like 10 items on one thing, and now he had 3/4 of the walls already done.
It's incredible.
You're doing it right. You're putting the money back into the business.
Yeah, you're not taking it. You're not out there spending, buying new cars. And a lot of these young business owners that I know and talk to every day are all doing the same thing. Reinvigorated my business, right? Because we're real estate, right? It gets kind of after a while the same old, same old. These last few years have not been that, but you learn how to kind of survive. Like, how did you survive as a gym owner?
Yes.
Through COVID, right? You couldn't interact with people for 2 years, but you made it out, and now your client list is through 300 people, 200 people. These bar and restaurant owners. I worked
God
in that
bless them.
space. I don't know how they did it. I really don't know how they did it, but they did it. And the ones that made it through, these bars are thriving, and they're community hubs again. It's crazy to see what those COVID years did, and this new generation of younger people that says like, well, why am I going to waste this 4 years? Why am I going to take a 6-figure, debt on my hand?
I would rather give my kids 20 grand in a year to go live in Europe than send them to college right now.
All day.
Go learn, go have fun,
All
make
the
mistakes.
people in college are going to hate the show. That work at colleges are not going to like the show. But
Nope.
I mean,
Listen, I went to college. I spent my $100,000 plus at Penn State. I have a degree. It got me freaking dozen jobs at least, if not more, because Penn State's community was out there. It was in
the
hotel
alum's
restaurant.
great. And,
It got me everything. I'm not upset with what my decisions were. I'm upset with where my kid's future potential is going.
Agreed.
That's my upset.
Yeah.
I get upset that we're talking about certain things in our public school systems right now versus talking about the value of a dollar and what inflation is.
Sure. That's what they should be learning. Right?
My
Things
kid
that we
came home
discuss
the other
every
day
day.
and was like, cotton candy at camp's $1.50 this year. It only used to be $1, Dad. Can I get 50 cents? And he has no idea why. He doesn't get it. And I'm trying to explain to him slowly, like, do you know why it went up in price? Do you understand, like, cost of goods, the dollar? And I know I'm getting the blank face
No,
from him,
it's
but he's actually, like, somewhat, I just don't want him to understand.
and he's how old? 9?
9.
So I have a 6-year-old, right? He goes to day camp right now. Day camp is a party every day, apparently.
Mhm.
You're at, these arcades.
Yep.
You're buying Chick-fil-A. You're buying,
You
what
get
else?
tablets, you can watch movies.
And I said, James, guess what? You see that big shiny piggy bank in there? If you're going to participate in these every day, I'll match it, right? If water ice is $5 now, I'll give you $2.50. And if you want to get the $6 one, guess what? I'll give you $3. But you got to come out of your piggy bank.
Yep. We
He
do the
says-
same thing with our
he
9-year-old.
says, well, Mom says she's never going to touch it. I said, well, Mom's wrong, because this is how you learn, one, how your money works, the economy works, and what happens. Why is a Chick-fil-A sandwich and a bag of chips $13? Well, guess who's not paying for it? Not me 100%, because I don't eat Chick-fil-A and bags of chips all day.
Nope.
So you'll pay $7, and I'll match it.
Nope.
So that's kind of how we do it. I know it sounds crazy. He's only 6 years old, but we had a conversation about it last night in bed.
I made my 5-year-old help dinner, and I made my 9-year-old take out the trash to the curb. And that's how they got their 50 cents extra.
And it gives them, and I bet you they executed it pretty damn well.
Oh, God, yeah. They were flinging plates to the spots, forks were sitting down,
It's
cups
funny,
were...
you're living through all this same stuff that really, this week I just went through all the same thing. It's what we're taking a trip for a wedding in Scotland in August. My wife loses her passport, so we're up flipping the house upside down. But the kids are now in there cleaning the room. They're looking for it. They're organizing their books. They're going through their trash. And I'm like, this is incredible. But it gives everybody in that whole house a little bit of self-worth, right?
Yeah.
It's like, man, what I do actually matters, and it impacts me, and it makes me happy as hell.
So we don't hold back, especially with my 9-year-old, and we've been with him like this the whole way. We treat him like an adult. He hears adult conversations.
Same way.
He quietly sits in the corner and listens to adults talk. Whenever I talk on real estate, he literally will follow me on the phone no matter where I'm going to hear the whole conversation out of it.
If we call my son, he'll say, Ryan Dolan, My City Mortgage. That's what he'll say.
We call him the CEO.
Yeah.
So the other day, he's like, Dad, how much did you sell that house for last week? And we don't talk thousands, we talk hundreds out of it.
Yeah, of course.
It's easier for him to understand. And he goes, but you said you didn't put it that price. Somebody was willing to pay that? I was like, yes. We listed it at a certain amount, and they were willing to pay more for it. Well, is that like the cotton candy type thing? Like they had to do something else to get that? I was like, kind of, yes. They have to be able to provide more information to get more money back from the bank because they're not paying for it all cash out of it. He's like, well, can you buy it cash? It's like, yes, you can. Well, wouldn't that be easier? And I was like,
Good.
damn, kid. Like,
we're jumping at it, economics 101 here.
Yes.
Yeah, but their brain wants to know how it works.
Yes, and my 6-year-old comes running over, or 5-year-old, and he was like, I want to learn. What are you guys talking about? And meanwhile, they come home from school. What did you guys learn today? I don't know. We were on our iPad doing this. I'm like,
yeah.
I'm having more engaged conversations about real estate and my clients' numbers than my kids at public schools right now.
Which there should be no reason why they should be learning it there either. Which, there's things that we have upcoming as well where we want to start teaching different or in college courses, right? We live and work in the city of Philadelphia. There's universities everywhere, right? Some of these universities, freshman, sophomore year students need to learn how to file their taxes.
Yes.
Need to learn how to apply and qualify for credit.
And stop doing TurboTax.
Just stop. Just stop it already. Learn it yourself, right? If you're making $50,000 a year, W-2, you should be able to file your own taxes, right? I wasn't taught how to file my own taxes. I had to learn throughout the way, right? I didn't know how to budget my life.
Shit, I used to call my dad and be like, Dad, I'm signing up for this job right now. What do I put on the tax line of this?
Honestly, it's sad, but that's kind of how it was. Our generation was not taught any of that stuff. But you're seeing this younger generation, well, they see people, the millionaires making, well, how do you become a millionaire? Maybe you're a rapper, or you're a ball player, you do this. But your real wealth is through real estate. 90% of the millionaires in this country made their wealth through real estate, right? So that's kind of where it's at. But the younger guys are inspiring because they all want to learn, right?
I will give it to them. I hate the fucking whys nonstop.
Oh, sure.
But the whys bring them good knowledge.
It keeps your tool sharp, right? My kids asked me, James asked me last night at 8 o'clock, well, I was looking on Instagram, right, and we're looking at a beautiful rehab in East Falls that one of my referral partners is done. Oh my gosh, who did that? And I said, one of my really, really good friends, right? This is what he does for work. He fixes old houses and he sells them to people that really don't want a brand new house. And then he says, well, why do you look at it? I said, well, Daddy gives them the money to buy that house, right? And then they pay it back. And he's like, you give them all of our money to pay it back? I'm like, it's not my money, but but that's how they want to learn how it goes. So I think then they equate it back to almost like they're piggyback. Hey, if I want this, I got to spend a certain amount of money. And trust me, they're more reserved. They say, well, I don't want to take it from my piggyback. Well, then you didn't want it that badly. And that's kind of the lesson over it all. Hey, we don't want to go to Target and waste our money on this crap that we're buying, right? I'm not taking $10 out of my piggyback. Well, neither is Daddy. So, and they really do learn. So, I mean, these younger guys, these business owners are brilliant now. I'm starting to really, that's the community that I kind of play around with.
That's awesome.
These younger, because I want to get into that commercial space as well, right? These guys are all going to start looking for brick and mortars for themselves. And it's just so inspiring to see these COVID winners come out. And they're not stopping for nobody.
It's amazing that you say COVID winners because I do agree that COVID actually created more winners than they did losers.
Totally.
The losers are the ones that took the payout and are complaining.
Sure.
Everybody else is
and they're still complaining.
They
right?
are.
They're still complaining about everything because they couldn't. It takes stones to make that move, right? It takes stones to say, hey, I can lose it all here. But look at all. I'm surrounded by success stories in the small business world right now. And it really recharged me and made me sharpen my tools and say, hey, you can sit here and complain about the market or you can attack it from different angles. What do you want to do?
Oh, well, and going back to the kids real quick on it, because trying to shape the next generation. So we told all friends and family for birthdays now, it's either gift card or cash. We don't want toys.
Don't want clothes.
Nope.
Don't
We'll take
need
care of all that kind of stuff. Gift card or cash. Cash gets reinvested for our kids. I opened up stock accounts for them. Whatever,
529 plans, whatever it must be. Sure. Yeah.
whatever cash they get has to go, and they get to choose if it goes into their stocks or their 529, and they can choose either one of those. The gift cards they get to keep, and that's their play money. That's where they can go.
If you want to go to Target, you want to buy a Sonic.
Have at it.
Have fun.
Have at it.
Yeah.
And we'll do the same thing. Hey, Dad, this is a $15 gift card. That's $18. Well, you're willing to pay it. I'll give you the $3 to cover it, but you're willing to pay it. We just did with our video games. We literally just went through every PlayStation and whatever console we have, the Nintendo one.
The Switch.
Switch.
Yeah. It's banned from our house right now still. Too young.
But I will say the Switch is awesome.
It is great.
We're transitioning everything to Switch.
Trust me, I love it.
But so I went to the kids. I was like, guys, we got 25 games here. Do you play this? No. Do you like this one? No. Do you like this one? No. All right, we're going to take this stack. Come with me. Go to GameStop. Took all the games, turned them in, got a gift card out of it. You guys want a new game? Yeah. Here's your gift card. Because you were willing to get rid of your other stuff, you can go get something else new with it.
Smart.
And they looked at me and go, wait, can we do that with like our old books? Can we do that with our old shoes? Can we do? Absolutely. Some of those things you don't get instant. Some, like mommy and daddy, we give our clothes away and we get tax deductions out of it. What's a tax deduction? Yes. And those are the things where I'm like, why are we not teaching these things consistently to our kids?
Honestly. I mean, when we go to, the green box to drop off our old clothes, our old electronics, and, I ask for a receipt.
Yep.
Well, why? You're just throwing it away. No, I'm not throwing it away. I'm giving gently used things to someone else, and the government is going to give me a little cutback on it.
Yes.
Yeah. So that's I love the GameStop idea because I think every kid in this country can learn from that.
Unfortunately, though, they're now like all downloads and not discs.
Yeah.
So I can't sell back all the downloaded ones. So I was like, shit, I didn't know what to do because we had like 5 downloaded
That's
ones.
right.
And I was like,
you can buy them right from the game. Yeah.
I was like, fine. Well, I guess these 5 we keep.
Well, look, maybe we'll link up with them kids and find out the next way to buy and sell those things because it's going to happen, right?
Oh, absolutely.
That's great.
There's no way that.
What a lesson to teach, honestly, because I'm always looking for new ways to do that, and that's a brilliant way to do it because it translates to everything.
And that's the thing. For us, it's just trying to educate our kids. Real estate has opened my eyes to so many things that I wasn't educated on through the public school system. Which, don't get me wrong, I'm here. I did a great job. I'm successful. So was my wife. We both went through public schools. I'm not completely bashing it. I want other things taught. I want them to have a head start. I want them to see things. I was 33 years old before I could actually physically understand my taxes. And that's bad. I was 20-something.
14 years of banking, and it really, probably 10 years ago, was probably when I learned.
I was 20-something before I felt comfortable actually writing a check.
It's crazy.
I still, to this day, it's very hard for me to understand buying and selling real estate, even though I do it on a consistent basis, because it is such a big event out of it.
Of course.
And these aren't things that we were ever taught. These aren't things that we were ever like, hey, this is why it's so big. This is what it can do for you. This is how it's going to do.
So you can naturally get in your own head, and it's saying,
correct.
If I make a mistake here because I don't know, it's like, could I lose it all? But now it's like, it's all right. It's okay.
Yes.
Right? You're going to make mistakes. There's no way around it. Doesn't matter if you're a mortgage banker, you're a real estate agent, someone's going to drop the ball eventually, right? And you just got to learn how to pivot from it.
Yep. To make $1 million, you got to lose $1 million eventually. It
just happens.
You make mistakes and you learn from those mistakes. And as long as you don't make the same mistake twice, you're good. And that's kind of the model we've taken with our kids is just let them make mistakes, let them learn from it. Don't berate them for making mistakes.
No.
Let them ask their questions.
How many mistakes are you making a day, right? It's like my kids would laugh. It's only probably 2 or 3 o'clock and I've made 20 mistakes already.
Easily.
Yeah. So, you got to let them live and learn, right? Trial by fire.
And real estate's one of those things that it's at.
Yeah.
It's trial by fire. There's millions of books out there, but there's no real book out there for your life, your situation.
Every purchase is different. Every transaction is different, right?
Yep.
And one thing is a constant, though. You have all those haters in 08, 09. They're waiting for the market to crash. I got news for them. I don't see it. Every smart person I've talked to in this business, no one sees it.
How?
So
how's it going to crash with no inventory?
That's what I'm saying.
And people buying.
and the rents, the way they are, it's just not
And
gonna
investors
happen.
dying for the deal.
And new construction now makes up 31% of the new housing inventory that comes in. So new construction is booming. If people are buying and building, they're telling you something. That's where the money's at.
Now, anybody who's heard me in the last couple of episodes, I do have a problem with all the multifamily and way luxury that's coming out. I'm very upset with our economy missing this whole middle ground build. I do feel that pinch, and I don't like it. I don't like having to be either a luxury person or a renting.
Or basically renting or scraping by to be a first-time home buyer. Yeah, I think a lot of the things in the market, I don't like what are happening. I don't think good credit borrowers now should supplement the income for people that aren't not responsible with their finances and credit. I think there's a better way, right? And I think that has to back to our point of the education piece.
Yep.
If they're going to implement things like that, don't penalize people that take care of their finances and their credit. They should be the example, right? They should be what everybody should do. Now we're sending the wrong signal. Hey, it's okay if
it's a moving target.
If you trash your credit. There's still some people that have 760 FICO scores want to do 20% down. Why are they being penalized?
Nope.
It's insane.
It's one of the
reasons.
It's
your body of your life's work, right?
Yeah.
So
literally,
and you've been taught that for decades, and now you're being told at one stroke of a pen you're wrong, which is bullshit, really.
Nope.
And it sets a terrible example. I will not be teaching any of my clients or my own children or family member to ever do something like that, because the second you start living that way, then they switch it on you.
Well, to me, I don't understand at all any of it. I don't understand why you've worked so hard to work this rat race game of raising this one score that is based around this rat race, and now you're going to tell us, thanks for doing a great job, but it's actually going to hurt you. And it's not really going to just benefit us, it's actually going to benefit these individuals who didn't care. Our economy is quite literally shifting from, like, as you said, here's the model person, here's the model buyer, here's the model track, here's whatever business, and let's model ourselves after that, to, oh, you complained and you're upset? Okay, well, we'll just slightly take it from here and we'll make you a little bit better.
And that's all it is.
Stop!
And listen, there's definitely some people that can't get out of wherever they're at, but there should be different avenues for them for homeowners. I feel everybody should get an opportunity to purchase real estate, right? Everybody should own a little piece of something. But it's not the reality of it's not for everybody, right? You have to work at it. It's no different from the time this country started. You still have to bust your ass to get there, or be around people that know what they're talking, learn, put a 5-year plan together, 7-year plan together. It doesn't happen overnight, and sadly, it's the gratification of this generation, obviously, that thinks, hey, even if I screw up X, multiple times, someone's going to bow me out. Someone's going to bow me out here. And that's
because we've taught them that.
We taught them, hey, it's okay. We'll just bow you out. The government says, hey, when these banks go well, we'll just bow you guys out. Screw the banks. I'm not worried about those people, even though,
Or the car companies. Or the Walmarts. Or
the airlines that gouge for prices.
Yeah.
I'm not worried about those guys. I'm worried about the people that think they can never purchase a home again. And it's not the case, right? They're going to believe they can't do anything, while the other winners are sitting there picking up everything on the sidelines. Yeah, they want you to believe that you can't afford an 8% interest rate. You can't afford this down payment. You can't afford closing costs. But you can. There's plenty of creative ways to do it. And there's plenty of talented people in our industry that can teach you how to do it.
And that's the thing.
Yeah.
There are hundreds of different avenues that you can take. Because again, you said it, every buying and selling is not the same. It's
every transaction is different.
So every person, every transaction is different. There's a different avenue. And guess what? You can jump from this one and over to this one and kind of swing this one in there as well.
Sure.
And that's why you need smart people on the money side out of it. And I can't stress enough how good it is to have a good mortgage person that can look at your situation as a whole, not just your numbers and say, hey, yes, you can buy yourself.
We're just going to get you a house.
Right. They need to understand where you came from, what your plan is, what your overall budgets are, what your monthly spends are, what can you reduce, because as you get that information, dude, you guys are like wizards.
And that's what we try to do. Honestly, and it's crazy because I'm scratching my head thinking, but to some people, when you get done these consultations and you're not just doing the transaction for the one house, it's like, well, now you're like my financial advisor.
Yes.
well, I didn't intend to be your financial advisor, but I gladly will, right? Because I made so many mistakes with my money, and I made so many, and I didn't lean on people, or I didn't have that sphere of influence that would teach me this. But then when I started linking up with people in our industry and saying, oh man, well, he was an auto detail guy, or he was a bartender, he was a teacher. Now he has a real estate portfolio. Anybody can really do it. They really, truly can. It's
action versus no action.
And right now we're in this weird spot in the market where there's a lot of no action, right? Because everybody's sitting there being told rates are too high, market's too high, you can't get in. And they're effectively trying to price you out. They really are. But there's always ways to get in. Always.
So I just wrote down price out. I wanted to make sure I hit this one. Yeah, they're trying to price this out because BlackRock's fucking buying up everything on the face of the goddamn earth.
Yeah, which you never see anywhere, and you never read about it anywhere.
No. But they are buying quite literally communities out of it, hundreds of houses within areas, holding 50% of them vacant, and putting the other 50% out slowly, one by one, and creating their own damn comps.
Sure.
And you want to talk about money manipulation. Come on,
I don't know how that is even legal in the slightest, but I mean, we see it, and
it's constant,
and it's constant.
And that's why I sit there and say, like, the competition is fierce, because again, there's a lot of mom and pops, there's a lot of little guys like me, there's a ton of mid people, and there's a ton of conglomerates.
Yeah, when you get to the conglomerates, you're in a different ballgame, right?
I mean, these guys aren't looking at buying 2 houses at a time. They're looking at a real estate agent, put together 400 houses within zip code area, and
find me land, and let's build it. Let's make our own house. Yeah, it's crazy.
It is insane. And if you think they're only doing it with home buyers, they're doing it with renters too. They're buying duplexes, quads, and so forth.
Their rental portfolios are insane.
Fucking nuts, dude.
Insane.
And they're keeping 50% vacant.
Sure.
Just to be able to drive it. So yeah, I mean, there's
money manipulation, like you said, at its finest, for sure.
Nope, and it's out there. I mean, and again, people are willing to pay the prices. They're gonna get their money. They're gonna get their tickets, and they will continue to win. But we can take a little bit of the pie back for us.
You can always exactly. One guy gets in the game, it's a win, right?
Yep.
And you grow up with people, and you go to school with different people that think they're never going to simply buy, and then when they do, it empowers them to a different level, whether it be in their relationship, in their health, whatever it is, their business. They don't all have to become real estate investors, but now they own something, right? And it gives them this insane self-worth. And then they put it towards their finances, like I said, their relationships, their health, anything, their next business venture. And it's like, holy shit, that really mattered a lot, right? Instead of just lighting your money on fire, spending $30,000, $40,000 in rent every year, and you're saying to yourself every year, shit, I can't buy, I'm going to have to renew my lease.
So it's funny that you said 30 to 40, because that's one of the reasons why I went and got new software that I'm going to be rolling out to my tenants, so they can actually start building credit for themselves. Because
that's great.
That's been one of the big things, right? We pay $30,000, $40,000 a year in rent, but we can never build credit. Never gets back. So they find property managers that allow it, and it may not be the greatest properties, but they're still getting credit out of it, so they're happy. And that's
doing a lot of the self-reporting and which I think is a great thing, because you want these renters, and as a landlord, I can say this: I want my renters to become buyers.
Yes.
Whether it's my property or not, or a client in my pipeline eventually. Do I want to raise rents 6% every year? No, I don't want to raise rents. But if the market commands it, you obviously have to keep up, right? And it squeezes a lot of people out. So how can you help them out? A lot of my tenants, I'll do free credit analysts on them.
Oh, cool.
Yeah, just because, I mean, one, we're looking at them when they come in anyway. So it's like the lower credit borrowers are already kind of getting squeezed out even at the rental market. And it's like, well, you can't just leave them out there. You got to kind of help them, right? And we'll go through a full income and credit analyst with all our clients.
That's awesome.
Whether it be renter or a client that's actually applying for a mortgage. So
I started, for my tenants, if you use me as an agent, there's no breaking lease. Leave whenever you want.
I love it.
Go buy.
Yeah.
I can care less if it's December 4th. Go buy. Because to me, let's go get you a house.
And I always say this, and it probably sounds a little rude, but like, who am I to tell somebody that they can't leave? Like, it's like, you should be able to go and buy whatever the hell you want. You helped me pay my mortgage and my asset down. Like, you did me a favor, in a sense. So I kind of agree.
I had tenants that were going to use me as their agent, and then all of a sudden they called me up and go, Paul, unfortunately the job went from Westchester to North Carolina. I said, congratulations, have a good
See you later. Like, when you're going to
I'll have a lockbox on the outside. leave it there. And by the way, I'm renovating the place, so don't bother cleaning.
You're not going to kick them out. I mean, what are you going to take $4,000 on the way out and kick them out and say, see you later, have fun?
Why? For a lawsuit later?
That karma's coming back at you.
100%, dude.
100%. That would be a nasty one.
I had tenants move out last November. They called me up. This was way before November, but they called me up. They're like, unfortunately, we had a family issue. Somebody passed, but they left us a house. My family's allowing us to buy it if we want to buy it. Oh my God, that's awesome.
Yeah.
Go.
They're
like, yeah, but our lease isn't up till March and we want to move out in November. I was like, go. You're going to be literally a block away from my house.
Next time they do that, tell them to call me so we can line up a gift of equity where they're coming out of their pocket basically nothing. And the family, if there's a trust or an estate set up, they're getting what they want too, right? If there's family members, that's another house hack that a lot of people don't really
talk to me.
So it's called gift of equity. So say, just for example, my father wanted to sell one of my brothers a home, right? And my brothers didn't have the money to come up with it. Well, you can structure, if there's equity in that home, you can structure it to be a 20% down, 25% down. My father would get whatever he wanted. If he wanted $200,000, $300,000, the equity's there. He would get his check, right? But then one of my brothers would move in there with no cash out of pocket. You can finance the seller's assist into the loan amount. You can effectively walk into that house with $0, but your loan is structured as a 20-25% down loan. So
rather than selling it and getting taxed on everything, paying agents and everything else.
Boom, you save, sorry, real estate agents, but you save 4 or 5%. I mean, I always have a real estate professional do my contract. I always write the contracts. Always lean on them to find out any, pitfalls, any of that. But the gift of equity for people that's family are willing to sell them a home, well, that's the way you do it.
Shit, that's $50,000-$60,000.
I mean, that's a big, and this is
closing costs and all that.
This is the way everybody wins. The selling side gets exactly what they want. You can structure it as a buyer to get in there however you like, and then you can even avoid a refinance in most cases. I mean, how can I afford a $600,000 home? Well, your folks only owe $200 on it.
Take over theirs.
Take over. If you can get an assumable mortgage, which now are becoming sexier, they're becoming sexier and sexier. The only thing that you got to watch out with assumables is, say, for an FHA or a VA. There was one recently in Roxborough. They want, we'll just use the number, $500,000. These people bought the home in 2012 or 13, right? So they probably only owe $200, $250. Well, guess somebody has to come up with to bridge the gap, and that's the buyer. So you can assume a 3.25% rate that they may have.
See, nobody ever mentions that.
Yeah, so they'll dangle out the sexy 3.25% rate, and they'll say, "Oh, you could assume our mortgage. Great, you take over a 30-year term that's maybe in 18 years left." And they tell you all the good things, but where are you coming up with the other money?
Yeah.
You can pull a home equity line of credit on the new purchase, though. You can do that. So if it's
getting hairy,
it gets a little hairy, right? Because now you're taking on a big, sizable chunk of debt just to obtain a rate. So you got to kind of weigh it out. Now, if they purchased recently, 2018, 19, 20, assumable rate, and they have 3.5%, 4.5%, whatever it is.
There's not that much.
There's not that much built in there, right? Now, these guys that are unloading their properties 10 and 15 years of owning it, well, they have probably 50, 60, 70% equity. They're going to they listed it for $500 for a specific reason, so
they want that pay.
They want the pay.
Yeah.
And now you as a buyer are buying a home and taking out a HELOC, which can get hairy.
I was going to say, I've heard these more and more of these assumable loans, and I, again, never understood it, because to me it just didn't make sense out of it. And the way you just put it, it makes sense, but it can get hairy out of it. But it works for family, and that's what I like.
Yeah, and
that's the cool part of it.
Because it makes it really, like, if you can pull it off, right? And you can get in those low interest rates, and you reduce a term naturally, 10, 15 years, because you're working right through the servicer of the selling.
Yeah.
So you work right in there. If you can figure out the financial piece to bridge that equity gap, and it's effectively just a down payment, more or less, you can really win.
And you can bridge loan it if you wanted to, hard money it. You could
exactly. There's definitely
HELOC.
But again, that goes back to if you don't have a strong supporting real estate professional cast with you, you better get one.
Yeah.
Because you can get lost in the sauce pretty quick, and there's a lot of different companies that will beat you up there.
Yeah, we typically say there's the 3 pillars out of it. You got to understand the market, you got to have the money, and you got to have somebody who can actually do the work.
Execute it. Sure. Yeah. That's why, these agents in this Compass office are fantastic, right? I mean, they're all over the area, face of the name, and they're going to steer you the right way because guess what? They're referral based. I'm the same way.
Nope.
You're not doing it for a one-time transaction. You're setting this client up for life. You're trying to get your referral-based business. You screw up and you try to hoodwink somebody, well, guess what? Your business isn't going to last long. You'll be out of business quick.
It's pretty cool to watch turn and burn agents, because that's what I call them in the restaurant industry, is turn and burn.
Sure, of course.
So we call them the turn and burn agents. They just want any client, don't really care what the commission is, go, what the price is, we'll list it, we don't really care. And if they do make it, they never have a good reputation.
No.
They are known as the turn and burner. And if they don't make it, everybody laughs at them on the way out.
And they're usually out of like this market shows where they're going to get out. They got in because everybody can make money in real estate. In those
couple friends, couple family.
Couple family. You can do 4 or 5 transactions a year and you can do well. But guess what? When the market really shows teeth like it is now, those agents don't have a clue. Most lenders don't have a clue. It's like you really got to know your craft.
I know at least a dozen agents that are no longer agents this year.
I believe it.
They're carrying their license, but they all went back to their old jobs.
And there's going to be many more to follow. So, because you're probably staring at another year of
at least
high rates. I mean, the Fed's telling you kind of where the market's going to go. The forecasts are really showing. I mean, obviously there's unforeseen events, but the game plan's really following accordingly to what these guys are dictating.
Yeah.
So,
and they've got another 12 to 16 months or something like that they said that this is going to continue.
Yeah, I mean, the optimist in the market says the end of Q4, early Q1 of 24. I think that's greatly exaggerated.
I think there's another spring market.
Yeah, you're looking summer of 24 is where rates get down to where people think it's affordable, right? Like 4 or 5, 6%.
Think about 6 1/4.
Yeah, but it's like, what are you doing in that 6, 7 months? You got to get moving. You got to come up with a plan. And that's where a lot of people are making a mistake, right? The one I'm hearing the most about, and I don't know where this came from, is consumers are terrified to have their credit pulled.
Why?
Well, they're so scared it'll drop their score X amount of points, they'll never be able to qualify. So, and they're really annoyed at trigger leads. If you pull someone's credit, you'll get 40, 50 phone calls from different vulture companies. But now what you do is run a soft qual.
Yeah.
Run a soft pull. See what's going on there. See where the score's at. See if there's any hiccups on that report that you can fix. I don't know what. It's not going to get better if you don't look at it, right? It's not going to get better if you don't work at it. So you're going to have the same conversation a year from now. But that is a stigma in a lot of consumers' heads. I don't want my credit pulled. I don't want this to ding my credit. And it's going to heal in a couple months anyway. So it's like, what's the big deal? It's going to be pulled eventually, so you better get after it now. It's like anything in life. You got to take it head on, or you're going to screw yourself.
So I took my kids' credit on head on. Open up credit cards underneath their names.
It's great. And I'm starting to read more and more about this. So I'm interested to see how this shakes out.
So I have my LLC credit card. And then I opened up 2 additional accounts underneath it, one for each kid. They both have $500 limits on those credit cards.
Amazing.
They've never seen it. They'll never see those credit cards. But every month,
it's such forward thinking.
One of my kids pays for gas. One of my kids pays for the other little things that I'll get.
So you just keep a little, hit it there, pay it off. Hit it there,
pay it off. So by the time that they are 18 years old, they'll have a 529 that has enough money in it that they can pull out, buy a house, and they'll have credit to be able to put down 20% no problem.
And you say the 20% now, right? Because it's like, that's the way we were conditioned.
I know, it's really 25%. It's probably going to be 45 by the time.
And of course, now where the market is shifting, it's to borrow more, right?
Yes.
A lot of the 100%.
Well, for them, I want 3.5.
Of course.
Yeah.
But a lot of the banks now want you to finance 100%. They want you to finance the minimum because that's why they build in these loan level pricing adjustments. They don't want you to put 10 and 15 and 20% down anymore. They want you to put 3% down because that means more interest, more cash for them, and that's how it goes. Some exciting things coming up, though, with 100% financing. Everybody's pretty familiar with VA loans and 100% financing. There's some things in the work where FHA is even going to become more sexy at probably the end of this year. It's got huge bipartisan support. It's called the Helpers Act. And
Okay.
this is 100% financing through FHA, and it's for your police, your fire, your nurses, your teachers up to 12th grade, EMT. I mean, and it's got huge bipartisan support, which is you never hear of. But it'll move a little slower. I bet by Q1 this will be out. So I've been telling all my clients and anybody that I know that works in this field and my loan officers as well, get the word out. Start planting the seeds. The worst thing that can happen is it doesn't get passed and you keep moving on with the market. But this is our market. I mean, it's Philadelphia. A huge police presence, fire department. You know, these are the guys, I mean, these are the things that you said. Well, you have your luxury class and you have your barely renter class. Well, that's all the middle, that fills in all the cracks, right? And I think that's an actual solution, right? Like, these guys can get in. There's no mortgage insurance on it. It's 100% finance. You still have to qualify on your credit, but it's an FHA qualifying. So
it's not like the old bubble loan thing that they used to take from medical people?
No, this is it. This is a traditional 30-year fixed. Yeah, and it's called the Helpers Act. And I anticipate it being passed at the end of Q4 or Q1 of next year.
Is it somewhat comparable in helping first-time home buyers like the Philadelphia first-time home buying program?
No, not in a sense, because that's more or less like when the money runs out there at the Philly First, the money runs out.
Okay.
If they're offering $15,000, one, you have to be enrolled in a course and do the course before you're even under contract, which again, that deters a lot of buyers, right? Because they're like, well, I'm not sitting in a course until they find a house and then they want $15,000, right? These grants, the grant programs that are available right now, some are good, some are bad, right? They want you to have access to it, but they make it really challenging to get it. Income limits, credit limits, asset. If you have too much in assets, they don't let you. If you bump off the minimum down payment, you're not allowed to utilize these programs. So they dangle that carrot quite a bit. Now, this is a tried and true product that I think really will stimulate the market and get that middle class back into the market. And this is a nationwide program through FHA. So, I mean, this is a real deal program where every teacher and every nurse and every fireman and every
city's going to have to figure it out.
And they should have access to credit first. I mean, these are the boots on the ground people that are really teaching our kids and saving our communities. I mean, why shouldn't they be able to access homeownership? Yeah.
And they should. I love the fact that I think it was like 6 years ago, Philadelphia raised the fact that you didn't have to live in the city anymore to be like a fire or policeman.
So fire you still have to live in there, because I just linked up with a few cadets that have to live in the city for a certain amount. Police do not. So police, you can kind of pivot in and out.
I know my neighbor ran the minute it came. Like he renovated it, made it beautiful, and then like that thing came out, he was like, "I'm renting, I'm out."
Which is a shame that it's even in place, right? Because you should either want to live there or not, right? It shouldn't be just because your job dictates where it is. But unfortunately, the ugly side of anything is they want you in the city so they can get your wage tax, right? And that's just that simple.
Dude, I know a couple of regional banks that were looking at this area to put them in. They're like, they're not going to do it because none of the employees want to go from the suburbs.
You don't want to pay the wage tax, and that's the challenging part. Now that you have the wage taxes that are so high, and now 50% of your workforce works from home anyway. So that's the challenging part of all of it, and it's a shame that that's structured that way. But the general fund in, say, Philadelphia, I mean, a quarter of that, they depend on that wage tax. And it sucks, but it really does go back. Who knows whose pocket it all goes into, but...
not the sidewalks pocket, I can tell you that.
Exactly, not all the potholes, because there'll be plenty to fix it. But the general fund, I mean, it really does. They depend on that wage tax quite a bit. And now you have two challenges. It's employees fleeing the city to work from home, and then other, police and fire that kind of dictate where you need to live, which is kind of, it grows that resentment.
Yeah.
You give somebody a 5-year thing, well, guess what they're doing after 5 years? They're running for the hills. They're out of here.
Yep.
I'll save my 4% on the wage tax and get the hell out. So,
are you seeing investment properties for, say, travel, like Airbnb or secondary homes within Philadelphia right now?
So, that's kind of the topic of the flavor of the week or month. People are kind of rooting to see these Airbnb owners kind of get crushed. I did read something. I think there were 1,600 listed Airbnbs in Philadelphia. I listened to something on KYW yesterday. They said 85% of those listings were told to be removed because they're not properly licensed and zoned, which listen, I'm all for free enterprise, and I'm all for, hey, you should be able to make money off your assets. You got to do it the right way, right? You got to meet minimum, and you know these standards are minimal, right? You got to make sure it's safe. You can't have these kids renting out 3 condos next to one another and having parties all night, right? That's not what it's for. You got to kind of do your vetting process.
Get a rental license like the rest of us.
Just the rest of us. We all go through the project. It's like anything in life. It takes some work on your end to figure it out. And plus, you got to do right by the people that are giving you money, right? You got to make sure it's safe. Why would you not? I like my sleep at night, so I know I know my licenses are up to date, and I know my property manager will tell me when it's not up to date.
I refuse to do anything illegally with it.
Yeah, and what's the point? Because it's, again, even if you get away from it, I just feel like
cutting a corner here and there is not worth the long term.
It's not worth it.
Nope.
It's not worth it. You know, we're open,
not in my world.
Yeah, like for us, so we're jumping into the Airbnb space. You know, we're real estate guys, so we like to do different projects. So we're opening up a 6-unit Airbnb boutique hotel in Old City, Philadelphia. It's going to take, so, you know, we've been following that Airbnb model, and we've hired a bespoke Airbnb manager to manage it because he can put the performance together.
Cool.
And he can, yeah, and it's a really great project, but we're using the old charm of this building that was built in 1845, and we're incorporating it back, and we're bringing it back to life. Speakeasy bar in the basement, a French courtyard, and we're incorporating all pieces from the old business into the new hotel part of it.
Is the bar going to be open to the public?
It is not. We're going to do, well, what we're going to do is, and we're still working on it, we're going to have a distilling license. So we're going to try to circumvent the whole liquor license thing. Because one, the cost of that is, you know, the COVID survivors, you know, you don't see as many new bars opening up because the access point is $150,000, $160,000, $70,000, $80,000.
A license is $500,000 just to like talk to somebody.
I mean, it's insane. In Bucks County, it's even worse. I mean, there's other areas, but no. So we got to watch. I don't know what kind of service bar but we're going to, you know, obviously the guests we're going to take care of first, and then the general tourist public that we would like to accommodate second. We don't want it to be a free-for-all, of course. And I was in that bar industry. You know how it is.
Yeah.
It gets rough. So we're trying to scale it, but scale it the right way, responsibly.
I think it's really cool that you're going after like the hotels after it. Like you're literally directly sitting there saying, I'm going to challenge you now, and I'm going to do it with charm, and I'm going to do it with a smaller, more intimate place.
Yeah.
So yeah, you can go stay on the 7th floor of that little, corner, or you can come down to my little Speakeasy and get a nice little room.
And that's where we're getting a lot of our feedback. It's right. Hey, we would love to take a staycation from New Jersey, my wife and I, just an upscale place where we can walk everywhere and it's safe, right? So that's kind of what we're doing. We're trying to kind of go against the establishment and do the short-term rental thing. You know, you could always fall back on the long-term, but the numbers don't perform obviously as well. Plus, the short-term rental gives you a new look on things. You know, you create your own brand, your design, your furniture. It's a really great plan, and I can't wait to share it with all the viewers on the show when it's out there. Because CJ, I bounce it off CJ quite a bit. Yeah, he's just got such a vision for real estate. So,
he really does.
And he's got great taste. So we were kind of showing him the finishes and things. But that's coming out in October of this year. And
congratulations!
We're really proud of it. Yeah, so it's something different. Obviously, always goes back to our point. You can sit around and complain about the market and let it beat you down, or you can do something a little different.
I'm going to give you a nugget to expand upon it.
Sure.
Go to Hershey next.
I've never been.
Oh, dude, it's a great little day trip thing.
I heard it's pretty awesome.
1 night, overnight. Hershey Park, if you like it, cool. If not, it doesn't matter. There's still enough little things to walk around.
Yeah?
Still enough little things.
I'm going to check it out.
Hershey's a fun little place. So we try and look for like little day things.
Yeah.
1 night, overnights.
Sure.
1 night hotels, 1 night Airbnbs. We do the Airbnb so the kids sit there, where's this? Why are we staying at this person's house? Well, it's an Airbnb. Instead of renting it, you can do this.
It's a little different, right?
Yeah.
And it gives them a little, you explore, I think you explore more.
Yep.
You're not so like, oh, I just want room service and I'm going to sit in my room. You kind of want to go out there and explore. You want to see the different things, right? And it's becoming more popular. You're seeing these breweries do it everywhere, right? They're now buying real estate next to their brewing.
Yes.
Like, how did we not think of this? It's like, create awesome little real estate pockets that you can stay in, stay there for a weekend, have great food, have great drinks, and you're not leaving the premises, and all the money stays there. It's like, that's it.
And it's cool because the super rich have been doing this shit for years.
Sure.
they don't go to hotels. They go to people's houses. They
go.
rent somebody else's house for the night.
Yeah.
And now it became Airbnb.
Airbnb, right?
My buddy lives, I can't give out too much information because he'll probably get in trouble for it, but my buddy lives down in Florida at one of the golf courses that a tournament's on. And so every time the tournament comes around, he rents out his house to the pros.
Sure.
And you would be surprised, probably not actually, but what they're willing to pay. And it's because a lot of them have kids and a wife. They don't want their kids and the wife staying at the overall. They want to have toys, a crib, a pool, a lounging area, a private space.
Sure.
It's
how you perform your best, or your guests perform their best, right? It's like, I love the idea. What Augusta does it too, right? It's called the Augusta rule, I guess. Where they're allowed to rent it for a certain period of time throughout the year, like tax-free or something.
14 days.
Oh, is that what it is?
Yeah.
Oh, that's so nice of them. But no, that's
you can do it too.
No, it's
your
really,
primary. You can rent out for 14 days.
I guess that's right. So so that's a nationwide thing, right? The Augusta rule.
Yep.
So
you could take that's what he does. So he does the Augusta rule. So technically, he doesn't have to claim that 14 days worth of income.
I think that's fair.
That's awesome.
It is awesome
because he doesn't rent it out any other time of the year. It's his primary residence that he only rents out for less than 14 days out of the year.
Hey, and if you were savvy enough to buy around some of those areas, those desirable areas, why not? You should reap the benefits of it, my opinion.
And he's walking distance to the clubhouse.
That's pretty cool.
So the pros are all like, oh shit. he has one that he has cameras obviously up and they can't show him, and he's like, dude, I wish I could show you this video. He's got a pro apparently dunking on his basketball hoop out in his driveway. And he's like, I can't.
Oh, it's cool though.
Because if somehow it gets out there, I'll never be able to rent this again. And this guy's been renting now for 3 years off of his house.
It's great. You hear the stories when the U.S. Open was here in Marion, back at Father's Day. I think it was 2014 or 15. But how they rent it out all around there. And I think, why not? A little supplemental jump in your income for the year, why not?
These guys leave them signed hats. Hey, ran into Rory today. Thought you would like a signature.
How cool.
Kids are actually talking. He has the kids set up on FaceTime. So his kids are actually talking to pros kids across the country out of it.
Insane.
And it's all just because he just wanted to rent out his house for 14 days.
Wow.
Found his little taxi.
I love it.
You son of a bitch.
Yeah, I think it's great, man. It's a cool thing. The things that happen in real estate with the Airbnb market, I'm a fan, obviously. I think anybody should be able to make the money if they do it the right way, right?
So do you have to put your Airbnb through Eclipse?
I do, yes.
Okay.
Yes, we do.
Okay.
Through the city, yeah. We were pivoting to that hotel license. That was a little.
That's what I was wondering.
Yeah, that was a little more challenging, and again, that's why we brought on another partner that actually, is an expert there, right? Because you get to that point, and it's like, wow.
Yeah, what's the decision?
This is out of my. I don't know which way to pivot here.
Yeah.
So we always lean on to the best experts to kind of open this thing up, and we've made some of them partners. So
nice.
Yeah, because we said instead of paying you 10, 15, 20%, why don't we bring you in as an equity partner?
Absolutely.
Don't you want a little piece of this? So,
and then don't you want to do this again?
And
again?
And that's our goal. That's the model. Let's take this. Can we move it to the beach? Can we do the mountains? Can we do some remote part of the country we know nowhere about? It just opens up different avenues. So yeah, it's an exciting project that we'll definitely be sharing for sure.
Something you just mentioned there is kind of one of my dreams. Anywhere that I want a vacation has become my dream of buying. So if I want to go see the mountains, I want to find a place somewhere that's a cool little town that I can get a nice little two-bedroom.
Because you know what you pay for the week. I mean, ultimately, know what you're spending.
That's what I'm saying.
It's hey man, this was really nice trip, weekend trip to Jim Thorpe, but you just spent $2,000, $3,000, $4,000 when you could have made money in the process. So that's the way my mind works as well. Because I used to do the weeks down the beach, and it's I could have went to Europe for this much. What am I doing? What am I doing?
That's what everybody tells me. Well, why don't you look at Jersey Shore? I hate the fucking Jersey
Shore. You're listening from probably all Jersey Shore people. But no, I was the same way. It's $5,000, $6,000, $7,000. And what people are willing to spend down there. I like to be on the other end of that.
Exactly.
Right? I would like to be the person that hosts these people for the price they're willing to spend. And put my money somewhere else.
No, so. I've got friends that their family has owned in North Carolina for 40 some odd years. Who knows? Because they're second generation out.
Sure.
And they go down there every year for 2 weeks, prime time, because it's their house. They cut it off. They don't care. They make enough through the other weeks that it pays for their fees and whatever mortgage they have on that place. And I look at them and I'm like, you son of a bitch.
They're great rent. I mean,
You get
we rent
25
down there.
family members together every year, guaranteed, for 2 weeks.
So it works we did that one time in OBX, right? It's like, and you look at the number and you say, shit, 30 grand. But when can you get 8, 9, 10 different families together, children together, all in a safe space with beach access?
Yep.
And it's like, you know what? It's worth it.
It is.
That's worth it to me.
Yep.
Right? And these people deserve to probably make a good amount of money on it because they're letting 30, 40 strangers in their home.
Yep.
So,
and that's where I sit there and go, how can I DSR this?
yeah, right?
To get one of those.
I'll tell you what, there's probably plenty of opportunity. We're just scratching the surface. Yeah.
So that's where I'm looking at those loans.
Yeah.
Is trying, can I BRR and DSR, kind of all of it wrapped out of state for my future retirement house? But it's a rental for now.
I think that's what you're kind of staring at right in the face. I think that's the new frontier of real estate investing. I really do.
Oh, I agree with you.
Yeah. And
Because it makes the most sense.
and I'm glad it flows. Now, somebody did play devil's advocate to me the other day and say, well, what if these rents do come down? And what if these rents start going under the 1-to-1 DSCR ratio? What happens there? Are you saving enough to supplement? Are you saving enough in case of emergency, rehab, renovation? There's a lot of unknown there too, right?
Yep.
It's like,
because if rents are going down, that means the overall economy is going down, which means the price is going down.
which means you're probably not going to have as many people willing to
Correct.
spend X amount of dollars to get into your place. So again, this is something that these things all sound great, but just the devil's advocate that said, well, what happens if you can't get, $4,000 for rent? You can only get $2,000 and you can't make your mortgage payment. What are you doing as a, because obviously we love the profits
Yep.
and we like to reinvest the profits, whether it's in real estate or whatever it might be. Are you saving enough? Are you keeping a contingency? And that's something that we should probably be teaching as well when selling these loans.
Yep.
So
That's one of the things where I think Airbnb is like in a full class of its own, because there are so many little nuances with it being successful versus it
not being successful.
And I mean, from having a pinball machine in your place to just having plain white sheets.
Sure.
Then the Airbnb space scares me because, what happens with this and that? What if I'm not getting $400 a night like my neighbor is, and I'm only getting $200, and it's only going out half the time?
Because then you're now what do you do as an owner? Probably
Right.
start lowering your standards.
Yep.
And you start cutting. Many people will cut corners,
Oh, the chair broke. That's fine. Just take it out. They don't
and
need
that-
2 chairs. They can have 1.
and that's So the quality goes down. Your standard goes down. Standard of the person renting, goes down.
Do I get the $350 cleaning, or do I get the cheap guy that can get in and out of there for $100 because he's just going to make the bed and wipe down
And then
the
you're
mirrors?
complaining about your reviews stinking because you cut
Correct.
corners. So that's where, again, as in all things, it requires focus. You got to look ahead because there's these things that are going to come up, and this is going to come up. If you think everything's going to cash flow forever, it's not going to. The market shifts.
Yep.
And are you ready to get, if an unexpected bill that comes in, are you ready for that? Are you ready for the market to dip, rents to dip? Because last month was the first month that rentals flattened out month
Yep.
over month. First time in a long time. And I don't know where they'll go from here, but you got to keep an eye on it. It's something you have to keep an eye on.
The devil's advocate is the part that my brother-in-law likes to keep playing with me, because I've only been in the game for 4 years.
Sure.
And so, again, he's the old guy. So I gave him numbers. No, I'll never get that for rent. He would list his place for rent.
Yeah.
Holy shit, Paul, you were right. I got that for rent. I
Yeah.
don't know how you're coming up with these numbers. And and it's now the point where he's playing that devil's advocate. He's like, dude, this cannot push anymore. And I listed one of my places a couple months ago. Thankfully, I got a tenant, but it took a lot longer to get it rented than I thought it was going to get.
Sure.
Because those numbers are a little tighter now.
Margins are tight.
Tenants don't like seeing $2,000 a month all of a sudden.
Sure.
Where a year ago, $2,000, they were like, "Where do I sign?"
Well, because a lot of things happen, right, in the market. Now, the average...
They didn't get raises.
Yeah, their wages aren't going up. The auto loans are outrageous, right? There was 6% of the market that had $1,000 or higher car payment, right? And now it's over 20%. 20% of the citizens in this country have $1,000 or more car payment. Pair it with your cell phone, whatever your groceries you're paying. How much money do you actually have to pay in rent at this point? Right? $1,000 plus car payment for most people is insane. For anybody, really, it's insane.
Yeah,
But,
I mean, that's What does they say the average income is? 36,000, 38,000, something like that?
So, and they keep seeing stats like, hey, when your folks bought a home, it was three times the amount of what they bought. But now, realistically, they're saying it's 10 times what your wages are.
That's the better number.
That's the better number, right?
Thank you.
Now to buy a home, it's 10 times what the average median income is. And it's scary, right? Because it's like, well, when are we going to catch up? How's the gap going to get bridged? But again, it all comes back to, well, you can get in the game. You can get in the game and fix and flip. You can rent and hold. We have products for it. I mean, we teach people every day, like, hey, your W-2 income is just not going to cut it. You have to find supplemental income in this market.
I mean, even if I guess you're making $200,000 a year, you're probably living the lifestyle of somebody who's making $200,000 a year. But it is almost impossible, in my opinion, to live off of a straight W-2 nowadays.
I completely agree.
You have to find some kind of, I know they call them side hustle or secondary income or something along those lines. And I don't care if it's selling T-shirts, drop shipment to Amazon, whatever your little thing is that you understand, your brain gets, and you can go. Real estate to me is just that tried and true.
Agreed.
It's done. There's millions of books on it. I'm not learning anything that hasn't been done a million times over already. It's something that is tangible. God forbid we go to central banking and the freaking government shuts down the internet for a day and I don't have money.
Sure.
I have a house. There is somewhere I can physically go stand in front and say, here is my ownership. Get out.
It's the tried and true. It's the least risk of all of them, in my opinion, right?
And yet everybody says it's the riskiest.
It's the riskiest. So it's like, well, you're willing to sit there and know your income's not going to make ends meet, right? So it's like, well, what do you? Then they automatically want to become somebody from Shark Tank, that there's Scrub Daddy or something. These guys work their whole life and they give up their whole life savings to make that dream work. You're not even willing to buy a piece of real estate. You can't make that same thing happen. The dedication and sacrifice, they're two totally different things. I mean, you're never going to be able to do that. So what I always say to and this is the way my brain works, is, yeah, it's great to have that steady W-2 income. I have my sales, I have my real estate, and then guess what? I can pursue something that I'm very passionate about, right? It's something that I truly love. This hotel project is something that is awesome, right? It's like something that I take great pride in. And it could lead to different avenues. I don't know where it will, but it's something that makes me happy. It's something that I get up in the morning, collaborate with my partners with, and I think it's something that's going to bring a lot of joy. And now I have 4 different things working for me at the same time, right? So my mind's always kind of learning. The people that are scared to take the risk are the people that, are going to get eaten up in this market.
Well, it was me for a long time out of it. What time do you wake up in the morning?
5. This morning I was up at 5 o'clock,
okay,
and then hit my snooze till 5:15. But in yoga, 6 o'clock in the morning,
right.
I mean, I just train my brain differently, right?
Yeah.
Like through COVID, it was like, let's stay at home and wear 6 a.m.ers, right?
Yep.
So it's like, let's stay at home and sit in our sweatpants and eat and order out all day. Like, well, when you came out of COVID, it's like, oh crap, the real world is still here, and you really got to get out there and figure it out. So I'm an early riser now. My 2 boys don't allow anything else. So plus it allows me to strategize my whole day before anybody else is up.
Yes.
So that's why I do it. I sit in silence for 30 minutes, stare at a wall, have a cup of coffee, and figure out my day.
Yep. So if anybody who can't obviously see me, I'm wearing a shirt that says 6 a.m.ers. It's a big compass movement that Sky Michael started as COVID hit. We were shut down for 6 months.
Sky's awesome, by the way. He works out of my
gym.
Yeah, I know Sky. He's a great guy.
So we were shut down for that 3 to 4 months, almost 6 months, and Sky refused to allow his agents to not be active. So he started 6 a.m.ers. He would get on a Zoom call if you wanted to get up with him, and you would just kind of have a conversation. He would mention a book. If you wanted to read it with him that month, you could read that book with him. We would talk maybe little lines here and there. Hey, this sounds great. And he would bring on guest speakers across the country that were, doing the same thing with us. And it was awesome, but it literally changed my brain.
Yeah.
It rewired myself to the point where the first 6 months, 7 months of COVID, I was sweatpants, drinking, great, don't have to go anywhere, don't have to shave, don't have to do crap in my life. I'm shut down and I got my kids. Yay!
Yay.
And this came around and I was like, fuck that. I can wake up, I can meditate, I can read. I read more books in my life in the last 2.5 years than I did my entire life.
I completely agree. And one, I can attest to that because half of his agents are in the gym in the morning when I work out there. And I know it's from that 6 a.m. Club that he has going on.
They have a 6 a.m. Peloton club now. That if you can't make the 6 a.m. call because you're on the Peloton belt on.
I love it. I'll tell you what, I love it. I think it's great because I think you get to the point now where we're inundated with everything that we're seeing on Instagram, Facebook. Well, how do you keep up with it? You just got to put in more hours, right? You got to learn more. You got to kind of shut the social. I'd shut the social media stuff off, right? I don't access it. It's a gift and a curse for our industry, right? You need to be relevant on there. You need to provide your consumers information. But if you let it consume you like it does a lot of people, well, you're wasting,
everything
8-9 hours per day. I mean, you see some of these people's free time; it's outrageous. The waking up early has changed my whole mindset on everything. And to your point, I have more books in my office now than I had ever read throughout high school, college, grade school, easily. I mean, easily. So it's when the kids go down, put the phone down, shut it off, focus on something that's going to make you a better person, make you more money, whatever the hell it does, it makes you happier. But do something different, and that's how I kind of am. Yeah.
So we emailed a couple times before this, and I'm sure you got my auto reply.
Oh, yeah.
So I've recently put up an auto reply on my email because I've been told I'm horrible about email. Because an email to me is kind of like snail mail. If you send me an email, it's really not that important.
Sure.
If you know my number, you can get a hold.
You can get a hold.
So I put up my auto reply, which for everybody to know, it says basically, if this is not important, go fuck yourself. But if it is, please text me, and here's my cell phone number. It's not that rude, it's not that crude, but that's kind of the gist of it, because I got stuck with emails. I would get one email that was kind of important, I'd read it, and then I would go off on a tangent and start doing that work.
Takes you right off your time block, it takes you off
everything. So then I tried to do, all right, I'll only do emails in the morning and in the evening. Problem about that is now all of a sudden you're setting up your day based on that, right? So I got to do these things, but they may not be that important. There may have been better things to be doing before it. So I pretty much cut emails out of my life, except for certain things here and there.
How's it working out?
I love it.
I can imagine.
Fucking.
Well, because the thing is, right, we make our line of work is we're supposed to always be available, which I disagree with, in my opinion. I think your time alone and your time with your family and your time to decompress, I think that's the most important time. I think it's invaluable. I think it's the most important thing of my day, right, is to have time for myself, to think and to map out what I'm going to do, and just kind of when life's kicking me in the face, I can attack it, right? Because if you're answering emails and you're on Instagram and you're text messaging and you're on phone calls and you're available all the time, well, when do you get any time to take care of yourself? Because then you service everybody like shit. So, and that's the reality of it. So, yeah, it's funny. I worked in that bartending space for years. I used to go to bed at 5 a.m. Now I'm up at 5 a.m. So if I can do it, I'm telling you, anybody can do it.
There was an interesting article that I read where the average human used to have about 3 to 4 hours a day of downtime to kind of just put their brain down. If it was waiting for a bus, waiting for a taxi, on a bus, on an airplane, whatever it was, there wasn't these cell phones.
You're going to scare me here with this.
So they read books, they read newspapers, they educated themselves, and they downed. They say the average American now has negative downtime.
I believe it.
To the point where even our sleeping we have sounds going on, we have lights going on, we have, I don't know, I have an automated bed, but they can vibrate. Like, there's no actual downtime for our bodies anymore. There's always a TV on in the background. There's a tablet. There's a podcast. We sit there and we watch TV with our cell phones as we're texting, and a tablet over here watching a secondary video.
Yeah. We're telling our kids not to play on the tablets.
Correct.
We're sitting on our iPhone.
Correct.
Check the emails.
Our brains are just not able to even function anymore because they're not getting that downtime. They're not getting that decompressed time like you mentioned. And that is so valuable for our brains to be able to actually store, retain, and recall information.
COVID was one of those either make it or break it times for me, right? It's like they wanted to give you all the information, and they had it, right? Everything, you were reading everything, and you watched the news, and you were hearing everything going on. Guess what? The news hasn't been on in 3 years in my house. It doesn't matter to me. I can look out my door, I can look at my children and my wife, and know everything's going to be okay. And I can look up and I can see the weather. Like, I don't need this.
I can talk to my circle.
Yeah.
And that's the news I need.
And that's the news I'm getting. And then what's going on around the community, in my life. I don't give a shit about all the noise on the other side. Because guess what? You get consumed in it pretty quick. And before you know it, your whole attitude shifts. And it reflects in your business, your family life. And a lot of people went through that. A lot of people never came out of it.
Yep.
I just chose I had no option. It's I have a family. I got to get your ass up and get it done.
We stopped all news, all of it.
As
soon as those numbers started coming out of the COVID scares and deaths, unplugged.
And look, don't for a second. I'm not discounting anything that happened in there, right? But we read the playbook all day. We've read it for years, and then some people were consumed by it, and some people's lives were ruined by it. It's how you do everything in life. How can you pivot, right? Just like how we're talking family, business, money, real estate. You always have to pivot.
I'm probably more of a conspiracy theorist now than I am a news junkie.
I know. It's like, well, man. Like a crazy one, yeah.
Yeah, like I question everything. I'm like, ooh, that says real cheese. Bullshit. I bet you they use
You'll find out 3 years later they bet you they use whatever that you think was in there. Yeah.
Oh, yeah.
It's great, though, because it gets your individual thinking going again, right? It's like you're not just kind of passing through anymore. It's, holy shit, this is real. And you can get consumed by it. It can rip you apart.
And that's back to the emails. That's why I got rid of it. Text messages. You want to get hold of me, send me a text. Honestly, if you call me, I'm probably not going to answer because I'm doing shit like this.
Sure.
Text messages are just, hey, dude, even my voicemail used to sit there and say, please do not leave me a voicemail. Shoot me a text with your question so I can answer you quickly.
And everybody said, it's funny, when it's like 2-3 hours go by and you don't answer. It's like you get a snarky comment. It's like, I'm not on call 24/7 here. Look, I love my job and I like what I do and I service my clients properly, but I do it in a time slot that allows me to live my life, allows me to enjoy the time with my family, invest, do different things that I truly enjoy doing.
I was working with my contractor a couple years ago one day, and he said something to one of his clients that stuck with me ever since, and I've used it. His phone started ringing. Client was talking to him. Phone kept ringing. Finally, the conversation was done. He stepped away, called back the person that was calling him, and the person on the other end was just, what? You need to answer my phone calls. We got work. There's a contractor here saying that you're told him to drop this off and do that. I didn't know it was coming. He's like, listen, if I was at your house working on your project right now, would you want me to walk away from you to take a phone call? No. Well, then why would I do that to somebody else? Because that's what I was doing. I was busy. You called me. Called you back the minute I wasn't busy anymore. Just give me that time. Give me that respect. And it's so true.
People have lost that.
Yes.
They've lost it 100%.
Because of text, because of emails, because of phone calls, and because of cell phones, everybody must be available all the time.
But I like how you said the opposite, right? I could sit in this interview and I could be checking my text messages the whole time. I could be checking my emails the whole time. Well, this interview would suck, right? And it's like we wouldn't learn anything. We'd be doing disservice to one another and your listeners because we're not focused. Be just present, right? And that's one of the.
Be present.
I know, right? It's like one of those things that you hear all the time now, but it's true, right? It's because I've learned through my kids, right? If you're sitting in a room and you're staring at a cell phone or staring at an email, you're not paying attention to them. They're paying attention to you, not pay attention to them.
Yep. And driving too.
And so, which is the worst, right? We're staring out at Germantown Ave here, and everybody's whizzing through, beeping, honking. No one's paying attention. And that's kind of the defense mechanism to a lot of people, and it's their escape now, which is, again, I'm a tackle everything. That's kind of what you said to me the other day. Well, what's your kind of real estate superpower and things like that? And I said, there's no real superpower to it, right? It's my power is I face my things. I face whatever I need to face head on every day. You run from it, it's just going to stack up the compound effects. It's going to stress you out. It's going to drive you insane, right? That's my superpower. It's like, guess what? I'm getting this shit over and done with, right? I value my sleep. I value my happiness. And problems are going to happen in business and life and family all the time. I like to get out in front of it. There's no real secret success to it. It's attack my problems head on, be transparent, communicate, and guess what? Sometimes something's going to go wrong. Somebody's going to mess up. A mistake's going to be made. But if you tackle it head on, I find my peers, my colleagues respect it way more when I take it than running from it, right?
Yeah. Oh, got it.
It's
hey,
easy.
Listen, I fucked up.
Hey, I made a mistake.
I'm sorry. How can you help me get out of this?
Yeah. Can we work together? That's what we're partners in this thing. Not you give me business, I give you business.
Yep.
No, we're partners.
Yep.
So we're all going towards the common goal, whether it be business or family, whatever. Tackle it head on. That's the superpower, right? It's like, which most people don't have anymore because you can throw your headset on or your AirPods in. And you don't have to make eye contact with anybody if you don't like
somebody. Just ignore the text message.
Yeah, or just It's oh man, no, it's true. It's so funny.
Have you read these two books? Because several things you just said made me instantly remember these two books: Compound Effect.
I have.
And Be Where Your Feet Are.
I have not read Be Where Your Feet Are.
Okay.
I've read The Compound Effect.
You had a couple of sentences in there.
Yeah,
that were
well,
like
because
direct.
it came from a very successful real estate agent. Told me, hey, this is the first book you should be reading in your industry.
That's cool.
Right? And you say, I'll be able to make it through. And then you read it and wow, it's like, holy shit, what's the next book?
Yeah.
What's the next one that I can read? So now I just started Atomic Habits.
Yes, I just finished that one.
It's good.
Yeah.
I'm very excited for it, right? And these are things that are now interesting to me.
Yeah.
I don't know if that means I'm learning, I'm getting older. I don't know what it means.
Both.
But guess what? It helps me tackle life's problems and the curveballs that come my way, where a couple of years ago I may have been very ill-equipped to handle it. And now I know the importance of not allowing people to steal your time, not allowing people to steal your energy, right? Energy vampires are the worst people. I don't surround myself by any of them, right? I don't go near any of them anymore. It's not worth it to me.
Nope.
I know what makes me happy. It's my health, my fitness, my family, my business, right? And then after that, I can do whatever the hell I want. So,
I really like the order you put those in.
yeah, it's just...
The health has to come first.
It has to come first. And, obviously whatever anybody's faith is always incorporated in that. I don't know. You can do whatever you like there, but there's somebody that you answer to, right?
I don't care if you answer to nobody. Just shut your brain down for a couple of seconds.
And then maybe it's you. Talk to yourself and figure it out. But yeah, they're the things that I've shifted my focus on because it makes again, back to that compound effect. That's it. The health, your 6 a.m. shirt is inspiring because you should be up getting things done. Even if you're not working out, you should be reading a book. You should, what does it say? Healthy, selfish habits. And it's true. But think about it. If you don't give yourself the time to do it, what kind of person are you?
Yep.
I've been there before where I'm a crappy person if I don't get the right amount of sleep. If I hit it too hard the night before, if I'm out late, I'm a bad person the next day. I'm not great. You're not on your game, right? You're not paying attention to your kids, your work. And
I fell out of 6 a.m.ers for about 3 months early on when it first started off. And my wife looked at me and she goes, "What the fuck is wrong with you recently?"
oh, yeah.
And I was like, "What do you mean?" She's like, "You're irritable, you're short, I don't know what the hell's going on, but something needs to be changed." And I was like, fuck. I've literally been listening to Sky, waking up, meditating, reading, and working out before the rest of my family gets awake.
Sure.
Then I send out all my emails and I send out all my timestamp stuff as they're waking up doing their morning routines. By 9 a.m., when they're going off to school, my day was almost completed.
Yeah.
It was like I had 6 hours of free time to figure out what can actually be productive. And I stopped waking up at 6 and moved to 8:30.
Ooh.
And I don't know why, but for whatever reason, there was a little time in there that it just shifted. And all of a sudden, I felt behind. And that was my irritability.
Sure.
I never could catch up
Because you can
to
never
my
catch
list.
up.
My list just kept growing and growing and growing and growing.
So in turn, your sleep sucked the night before because now you're stressing because you don't have enough time. No, I can.
My eating habits, all of it.
All of it goes to shit.
All of it went to shit.
Sure.
I stopped reading, stopped meditating, did all of it. Stopped working out.
Look, it's just important. It's part of the process, right? Growing up, like you're in your 20s, you think, hey, I can live forever. I can do anything. I can eat anything, drink anything. I can run away from my problems. I can go travel. Yeah, it's partly true, right? And then when you want to be successful in whatever line of work you're doing, well, you got to sacrifice.
Yep.
Did I think I would be sitting here doing yoga and different classes and reading books at 6 a.m. in the morning? No, probably not. But guess what? When my wife does something every day when we sit down and I try to make it home, even in the sales role, to have a family dinner. And she asks, well, what's the most important part of your day? What's your favorite part of your day? And my answer is very much the same every day. It's I get up that early and get all that ancillary shit out of the way. 7 o'clock to 8 o'clock, I can sit and have coffee with my kids. I can draw. We can discuss day camp or school, whatever's coming up. That hour is the best part of my day. I'm not on my phone. I'm not on my emails. I'm 100% happy and present at that day. So my answer really never shifts. And look, there's some fun stuff that goes on throughout the day. But again, I'm with the people that I care about most, and that 1 hour uninterrupted with a clear mind. And I already know what the steps are behind it. It's invaluable. I mean, it's the most important
And tomorrow's
thing.
going to be easy because it's a routine.
Yeah.
You already know tomorrow's good.
The consistency thing, I can't believe it because I used to operate in complete chaos. I really did. I thought that's the way that I operated maximum, and it's just so not true. A lot of people will say that to me. I thrive in chaos. I said, no,
that was the restaurant thing.
Yeah, it was the restaurant mindset, right? It's like you can work in chaos, right? You can get through chaos, but you don't thrive in it, right? I don't think that's the case.
Somebody always put it best to me. You can swim in weeds and be good at it, but you cannot win a race swimming through weeds.
How can you swim in weeds to begin with?
Well, you can just tread, right? You know, you can sit
there.
They're not going to pull you down, but it's going to be annoying. It's going to be, So the restaurant industry is kind of like that. You can work really well in that weedy situation.
Sure, yeah.
But if you really want to excel, get to clear waters and set your day up and go forward. And I took that into real estate. And the minute I made that change,
it makes a shit ton of sense, I guess, when you say it that way.
It made exactly.
Yeah.
Like just get over to clear waters, set your day up, and it's easy breezy. If you stay in those weeds, you might do really well, and people might look at you and be like, "Oh shit, you're not drowning, dude. You're awesome." But are you really doing well?
But inside, you're getting your ass kicked, right?
Absolutely.
Your mental's messed up. Your health's messed up. Something's not operating at 100%.
Absolutely.
And one thing out of this whole thing. Everybody should work in the restaurant industry at least, for a year. It's just learn how the real world works. And that weed situation, right? Those high pressure situations. Because what you're learning now is a lot of people just can't simply handle it. They cannot handle it because they're so instantly gratified now. And if something goes off schedule, well, I can just shut it down. I can just jump on this or jump onto the next thing. The real world just doesn't lend it. These people are getting their ass kicked because of it. It really is. You got to learn how to operate in those high pressure situations. And right now in real estate, that's where we're at. This is the highest pressure I've been in quite some time. I mean,
this is a pressure.
I've been in 3 or 4 of these, and they're not fun. And we've been in it 18 months here probably. But guess what? Why it hurts even more is because we had 2-3 cushy years, right? We all made money. And it was easy. Everybody made money during that process. It didn't take that much skill to do. It didn't take that much focus.
No.
And now you quickly learn. Guess what? The market changes. You better be able to change with it. So,
and to your point of being able to function in high stress situations, real estate ain't not less. They have their stress, and when it comes, it's high stressful situations. Sure. I mean, my least stressful situation last year was within 2 weeks. I got one dishwasher, 1 refrigerator, and 2 washing machines all break at different places. So basically, each one of my units lost a major appliance out of it within a 2-week span. I look back, and when my first year, I probably would have literally cried and just been like, I don't know what to do. It's over. I can't come up with it.
Paced around your house, bitching about it the whole time while your wife's like, shut up.
Yeah, exactly. And now, meanwhile, fast forward 4 years, I got there and I was like, okay, great. Lowe's delivered in 3 days. Thanks. All right, Lowe's got another one for you. Delivered in 5 days. Great. Lowe's got another. All right, just roll with it. It is what it is.
Step back. Take the deep breath. Now, to your point again, if your day's not set, if you're not disciplined, if your time's not blocked out, if you let people steal it, well, you're going to freak out because you have no idea which way you're going next anyway. I always now, and trust me, I'll blow up very quick, right? And I can get rattled and derailed. A bird can fly by and I can totally switch course of what I'm thinking here. But I really retrain my brain to say, okay, step back. It's a washer. It's a dryer. It's not that big of a fucking deal, right? You can.
And I'm not going to maintenance it.
Yeah.
I'm sorry. It's getting changed out because by the time I pay Mr. Maintenance guy in there, parts, labor, and the delay on that guy.
Look, it's going to cost, and it sucks. It's a part of doing business. But if you're honest with the people that you're doing with, look, there's somebody that wants your money anyway, so it's going to happen quick. You can turn it around fast if you can just get right out in front of it. If you avoid it, well,
it becomes a problem.
Becomes a problem.
And that problem becomes bigger and bigger and bigger. I tell all my tenants, listen, I don't really care what happens, but there's 3 things that I need to know about. Death, fire, and water.
I think it's easy.
Any of those 3 things happen, I need an immediate phone call.
Yeah.
Other than that, it's not that big of a deal. We'll handle it in the morning.
I completely agree. I'm the same way. I've been blessed enough to have tenants that kind of follow that mantra as well. It's like they kind of think, hey, it's not that big of a deal. If the house isn't on fire, if there's a leak not coming through the ceiling, and somebody did not die or a death in that family, it's it's not that big of a deal.
It can be handled.
Will be fixed.
Yes.
Yeah, that's what we do.
Yes.
I mean, it's just
a ball went through the window. I'll get you a new window.
Yeah.
Really? I mean, you're going to get charged for the ball going through the window. But yes, I will get you a new window. Like, it's not the end of the world.
Yeah. You know, sometimes we'll have pets or tenants with pets, and they'll scrape up the hardwood floors. And look, it sucks and it's annoying. But you took on that tenant because you wanted that quick pay. You need to know that, hey, I'm probably going to drop $5,000 to resand these floors.
And that's one of our niches.
Yeah.
I allow all dogs. I don't care the size. I don't care the breed. I do not have breed restrictions. That's one of my niches.
That's great.
Because that's what we were. We were tenants with a pit bull in Manioc, Roxborough.
Yeah.
Good luck.
Good luck.
Thankfully, I had a brother-in-law that had properties. So as they were getting fenced and rehab, we lived in them.
But you were probably turned down plenty of times. I mean,
but that's why we went to my brother-in-law.
Yeah.
Because we couldn't find a place.
Yeah. I got to be honest. That would scare me too. But again, it's one of those things where you should have the opportunity to rent somewhere, right? It's your companion. It's your family member. So it's like...
And as sad as it is, I got kids, right? But I have a dog.
Sure.
I have my pit.
Yeah.
I will take a pit over kids any day.
I would not.
As tenants. As tenants.
Oh, yeah. Yeah.
I would take a dog tenant.
It's funny when you say that because my property manager says, you have 2 boys. Would your kids rip this house apart quicker than a dog? And I said, absolutely.
Yes.
I said, sign the lease.
That's what I'm saying.
We just did it, my last rental.
The dog might pee, might rip some things up, but my kids destroy my house.
Every single thing in the house.
I mean, I've never seen a screwdriver take up a 90-degree corner faster than when it's in my 4-year-old's hand and they are figuring out what it does.
Yeah.
And now I got to replaster. Thanks.
100%. I completely agree. But that's another thing. You step back and you analyze the situation and say, well, yeah, that makes a shit ton of sense.
Oh,
yeah.
I mean, between the crayons and now I have to repaint and I have to prime, not just repaint. I got to fucking prime because it's not coming off. You got to get in there,
sure.
Oh, it just... No. As I say, I love my family. I love kids. But I will take a dog over a kid.
Oh, wow. Bold statement.
Bold.
Yeah.
And I stand by it.
Very bold statement. I hope your wife is not listening.
No, she knows it. she knows it full front. Because, I mean, and this is nothing bad about it, but renting to kids does bring different landlord responsibilities.
Yeah.
Anybody under the age of 16, we do have to have different things that we do on our end as landlords. So it's not that it's me, I joke about the damage, but there is other things that come into it.
Sure, there's as in anything in life, right? There's a vetting process to it all and what's your contingency plan on handling it, right? Yeah. If you're willing to rent to a certain class or a child, pet, whatever it is, well, what are you going to do? Because there's going to be unforeseen things that happen there that may not happen to a doctor that's working 312s or something like that lives by themselves. And that's the fun part about being a landlord, right? It's a revolving door that allows you to live the life you want to live. So you just got to be ready for it, right?
And a little nugget: each dog has been treated differently. So almost all my tenants have dogs.
Yeah. That's great. I did not know that would be a niche. That's interesting. You would very rarely find landlords that say that.
Oh, God. So one of my dogs is a big German. Well, not my dogs, but one of my tenants' dogs is a big German. It's a big dog with some big nails and some weight behind it. So I knew it was going to do some damage on the floors and stuff like that. So for the first year of renting, they paid $100 a month extra for their dog. If they renewed the second year, that fee came off.
Oh, nice.
Because I already had $1,200 that would cover whatever damage that dog would do. And if they're going to be there for 2 years, let's be honest, it's really not going to be much different than a 1 year damage.
It's going to be the same thing.
Plus, now I don't have to turn it over. They've been there for 5 years almost.
It's great.
So they're going on into the fifth, and they're phenomenal, and they're going to become buyers for me.
And that's how it all works, right? You give a little, you take a little, and that's kind of how it all goes.
I have other dogs. There was 3 of them. They were all under 10 pounds. They paid, I think it was like $300 as a security deposit for them extra. If no damage was done, they got it back. If they did, I got to keep it. I think I kept like $100 because my cleaning crew charged me extra for the fur. That was everywhere.
Yeah.
But like, I treat each dog differently too.
That's
but I
great.
can't do that for kids.
So now, have you ever thought you can find a whole pipeline of new renters?
Become my buyers.
You can go to any of these small business owners, these doggy daycares and things like that. And that could be a huge pipeline for you. Because 9 out of 10 landlords that I know probably would say no. Definitely would not want to pay.
Exactly.
So, yeah, myself included. As much as I love them, but it's.
And then what I say earlier, I turn my renters and they're part of my family.
Sure.
My tenants are part of my family. I run it. I do property management. They all have my personal cell phone number.
It's great.
So when you become a buyer, you can break a lease whenever you want.
It's smart. It's just smart business, right?
To me, I'm trying to create a business, create a self-generating business. So yeah.
It's going to hurt you maybe in the short term, but in the long term, it helps two people, multiple people.
So I was talking about that commercial space, right?
Yeah.
I've been looking into trying to find a nice little commercial space for some kind of doggy shampoo, doggy this, doggy whatever, because as you say, that's my pipeline. So if I can start a little business that's taking people in Manioc, Roxborough, where people want to rent, where people want to go.
It's your hub right there for your pipeline.
And then there goes your tenant. 2 to 3 years after renting, they become buyers. 5 to 7 years, they become sellers and buyers. Self-revolving machine. And that's the beauty of real estate. You find your lane. You can stay in it. You deviate here and there that you feel comfortable, or you take on a partner to learn, to grow. But you find your lane, you stay in it. And everybody's lane is different. Everybody's
lane is different, right? It's like when these shows first started coming out, everybody thought they were going to be able to flip homes. Well, now guess what? Everybody realized it's not a realistic, opportunity for everybody. There's not margins there. The access to money's not there. The access to hiring a crew is not there. Taxes, right? That you spend half of your money, you don't pay attention, and guess what? Boom, you get a tax bill.
Yeah, those shows never talked about taxes.
Exactly.
That's a W-2 income, everybody.
There's a lot of things that people need to learn, right? They have to learn how to get in this, and it's just not for everybody.
Yeah.
But the home ownership part of it, I think everybody should deserve a crack at it, but you shouldn't get it handed to you. You got to work at it, as in anything.
Well, because that's part of the problem, right? If it gets handed to them, they never worked for it, so therefore they're never going to treat it the way that it is.
You don't cultivate it the way it should be cultivated,
right?
You don't nurture it the way it should.
And not to kill my parents' generation, but their generation of you bought it and you lived it and you didn't improve it.
It's crazy.
You did not dump money into the house.
Yeah.
You made money when you bought it, and you never refinanced. Maybe if you had needed something, you refinanced, but that was only if you needed money.
That was your rainy day fund.
Correct.
It's like, hey, my son or daughter is getting married. It's like I got to pull $30,000
from my house.
That's how they pay. That's how they pay for the weddings. I didn't even realize that.
Yes.
I think that concept is insane to me.
Yes.
Because I would turn around and say, you're crazy if you think I'm pulling from my asset to pay for one night for you.
Oh, my father, when he told me that they paid off their house they paid off a little earlier, so we'll say like 25 years or whatever.
Yeah.
You never refinanced in 25 years? You kept your like 11.5%. Like, meanwhile, I'm sitting there like, I'm looking to refinance 3 properties this year. Like, that's equity, that's cash. And he looks at me, he's like, why did you take the wall down? They could improve the space, and now I can put an island, and now I can put a dishwasher in, and now I can actually have more cabinets.
It's functional.
But he's like, yeah, but you could have used that money for what? And he named things for him. And I was like, yeah, but now I can charge my tenants a little bit more because it's a better space, and I'm building more equity, and
and they can supplement the payment on it.
It's a generational.
Yeah, it's a generational thing. It really is.
They don't see homes as an asset like we do. They see homes as an asset, as a big bank account that if dire need, rainy day fund, they can tap into.
Sure.
But otherwise you don't touch it.
Yeah. I don't understand. I never understood that mindset behind it. So that refi boom was quite an eye-opener for me, right?
Yeah.
It's because you did get, the older clientele that called you finally. And like, well, what does this look like? One, they can't keep up with the process. It's so overwhelming.
What, I'm starting a new mortgage?
It's starting a new mortgage. It's like, and you hear the same war story. It was 18% when I got it, and I bought it for $40,000. And I said, that was 32 years ago.
Yeah.
Like, times have very much changed. Banking has changed. The living situations, the family unit has changed.
But I only pay my taxes right now. That's only $400 a year.
Yeah, it's like, but you're also working until you're 65 years old, and you're bitching that you're living paycheck to paycheck. It's just like, it's hard to teach an old dog new tricks, right? And that is kind of what I've learned with that generation.
Yeah, God bless you.
As you respect the guys that paved the way for you, but real estate was not one of those things that I've learned anything from the older generation. So guys that boots are on the ground now, these young entrepreneurs, these young developers, these builders, I mean, they take risks. but they're calculated risks. They're not. It's like, hey, I'm going to the bank and taking $500,000 out. They
Well,
know
remember-
each step. They know each partner that's lined up. Time is money in our industry.
Oh, yeah.
And they have it all lined up. And the way some of these guys operate, I'm telling you, I grew up with some guys that I don't know if they can read, but damn, they
Build
can
a fucking house.
and they can build and sell a house like nobody I've ever seen, and they can do it quicker and a finished product with attention to detail like I've never seen. So I hate when people say, well, I'm not smart enough, I don't know how to do it. I'm telling you, I reference people like that all the time. Like, I know people that probably cannot do simple math problems, but sure as shit can build a house from top to bottom.
Yep.
And it's incredible to see.
Yep.
And again, that inspires me too. It's like, wow, you don't need to be book smart. You don't need to be super street smart. You need to find what you're getting, where you fit in, and do your thing. And some of these guys have stayed in their lane now, and now we're all trying to catch up to them.
Yeah.
It's funny as hell to say, but, again, it always moves the needle and say, well, how can I get a little better? How can I keep up with him? And then again, you bounce ideas off one another, and you're like, wow.
Real estate, as you say, you need that circle.
Yeah.
Like,
The sphere is in it. It's just it.
Even if it's just 3 people, 2 people, don't make it just you and somebody else.
No.
But at least 2 other people. You need a minimum of 3. And you bouncing ideas, talking areas, talking rates, just to know different contractors, just to know different plumbers. Yo, you're charging $500 for that? I just got blasted for $1,250 last month for the same thing.
You have no idea what the cost of goods are, what the cost of labor is, any of that thing. You think one guy can be fair because he may be the only source you're listening to your whole life.
Yep.
Right? So in our job is we never turn down a meeting, right? You take a meeting, hey, it might not go well, you might not jive well, but you took the meeting. You learned a little something. You learned you didn't like something. You learned, honestly, it really is. You're not going to like everybody you meet with. You're not going to like everybody you work with. But you can make your sphere the way you want to do it.
Yeah.
Like I'll take 20 meetings a week. I may work with 2 of those people.
Yep.
But you went out and you got uncomfortable, and you learned something different from each one of them. I take something from each one, whether good, bad, indifferent, whatever it is.
And that's the lesson. You gotta be able to have conversations and take something from it, which means you gotta listen. You can't just always be sitting there saying, this is what I want to do, this is how I want to do it, this is what. Listen, go find the expert. Listen to what they have to say and get better.
Put it in action.
Yes.
We set this podcast up 24 hours ago, right? I didn't even
I
know.
I don't think people would ever believe that, but it is so
I'm
true.
telling you, I've never did a podcast in my life. And
Neither did I.
I talked to a good referral partner. He said you should jump on it. We jumped on the phone. I said, hey, why not? There would be other people that would plan for weeks and want an itinerary.
Oh, there are.
I didn't even know halfway through this interview we were probably filming. And we just you got to kind of roll with it. It's like anything in life. You just kind of go with it, learn. If you fall flat on your face, who gives a shit? Right?
Yep. I've been more happy with the times I've fallen on my face than the times that things actually went the way planned because I'm afraid that I screwed things up.
Sure.
There's no way that could have gone by plan. There's no way that this is over. Like, something's going to come back around that's going to, no, this is not done.
Yeah.
Where if you screw up, you're like, fuck, that sucked, but thank God it's over. That was awesome. I learned this, and that.
Yeah.
And you move on from it.
And you just move on. And then you learn how to pivot. You get more, resourceful.
Yep.
You figure out, shit, well, now I think twice before I do that again. Now I think twice before I work with him again, right? And you ask the questions and you start, that's what sharpens the tools, in my opinion, right?
Yep.
It's when you get kicked down, how the hell are you going to pivot? Because trust me, there's years and times where I would say, this sucks. I'm out. I don't know where to go. I don't know who to turn to. And there's no magic potion. It's get the hell back up, have another conversation, learn a little more, and do it again.
And that's the thing. You ask any millionaire out there, what's the difference between you and somebody who's not successful? Action. They just were willing to take action.
Get out of your own way.
Yep.
And I was my own worst person at that, right? I would get in my
still
own
am.
head.
Yep.
So of course, I mean, we all are, right?
Yep.
We're human beings. So it's like now that we keep talking about getting up early, before my feet hit the ground and you got those doubts running through your head, this is going to be a crappy day. I say, you're going to make somebody pay today, right? Like you're going to get your ass in gear. Before my feet hit the ground, you're going to have a good day.
Affirmations, dude.
Dude, it works. I can't believe I'm even saying it. I got to be honest. It's like, but it's true because if you get out and you think it's going to be a shitty day, more times than not, it's pretty shitty.
Yeah.
So, And I'm very guilty of that.
Especially if you go to sleep with that attitude and wake up the next morning.
And that's why it's so, now I'm pretty regimented with, get up at 5, get up at 5:30, get it done. Do I want to do it every day? Hell no. But I got people counting on me that I need to do it for. And then ultimately for myself. It's ultimately I need to do inventory on myself every day before I get up, before I go to bed. Every single day, what the hell is going to make me operate the best capacity I can do.
If anybody's looking for some good affirmations out there, Bob Baker puts out some good affirmations. He's one of the guys I listen to out of it.
Yeah, I've heard, and I got to start listening a little more.
Yeah, he's pretty good. He does guided affirmations or guided meditations, however you want to talk about it. I use him as a guided meditation. So I take his, whatever he's saying, which is, he likes to do the repeats.
Yeah.
And I just kind of zone out. I do 5 minutes of meditation beforehand. I do his affirmations or guided meditation, and then I'll do 3 minutes of just kind of like my own internal. And it's all under 10 minutes.
Life changing, right? It's 10 minutes. I do the same thing. Sunday, Saturday mornings, I'll sit outside, I'll have a coffee, and I'll just be with myself, right? Myself, my thoughts, or I could just clear it all out, right?
Yep.
Stare at the nature. I can't even believe I'm talking like this, but it does.
It's awesome.
It's how life changes. Yep. And it changes fast, right? It's like you think you're going to be this one person forever, and it's just not.
Yeah.
You better keep up, or it'll kick you down. It just will.
I started recently walking meditations, which was really cool because it's all about the nature and picking out the good things that you're seeing, the flowers, the birds, the smells, but you do it without a cell phone.
It's great.
No music, no cell phone. Just your thoughts, and whatever your brain brings you to at that moment, you just kind of experience it. Where does it take you? Ooh, a bird, a cardinal. Ooh, cardinals are cool. My dad used to work for Cardinal Company. And you just kind of go with it. And then if it gets too far, you just wrap it back in by sitting there saying, distracted, bad thought. Distraction, off on a tangent. Distraction, made up story, never happened. Because we're storytellers.
Sure.
We love telling ourselves stories.
It's crazy.
Sky Michaels, he'll tell you all day long, stop telling fucking stories. I can't call that client. They're going to yell at me. Stop fucking telling a story. Call the goddamn client.
So our world is crazy like that. It's like, hey, if you're out prospecting, do their stats, and then you get in your own head, right? It's like, just make the phone call.
Yep.
The worst thing that can happen is, hey, they're either not going to answer you or say they're not going to do business with you.
Yep.
And then you can either keep calling or you can pivot somewhere else. It's what is the worst thing that can happen?
Somebody can say no.
No.
That's all my dad ever used to tell me.
And guess what? There's a million other people out there to talk to that can get you where you need to get to. So that's how I am. Why run from it? They're only going to tell you no. Who gives a shit? And guess what? You're going to run into somebody who wants to help you and can change your life on it.
And you said it earlier. In fact, I typically respect the people who tell me no more.
I do. I do, because there's cracks in something that I'm trying to, push out, right?
And I respect that they had the balls to say no. Right? I have more important shit in my life.
I agree. And so, like, hey, this is just not my speed right now. And that's okay, right? You find someone that's in your lane and you figure it out. Yeah, man, this. I know,
I just looked at the time.
No, this is great. This is
CJ's gonna kill me. We're gonna have to put this in 2 parts.
Do a little edit situation. No, but it's what you learn through, and this market pressure right now has made me learn a lot of the stuff a little quicker than I thought I was going to learn. Yeah. Right? It's how to take inventory of yourself first, and what's important to you, and how to make the money. Make it translate into money and happiness.
Yeah.
Right.
Oh, absolutely.
Because we're doing this at the end of the day for business. We're doing this to make some money. We're taking care of our families. We want to leave a little legacy.
It's still business.
We want to leave something that we're proud of, right? And this is the job that we're in, and this is what we like to do. So, we're not just doing it for a big smile on your face. This is hard work. This is not just
you get your
rainbows
punches.
and sunshines every day. You get punched in the mouth quite a bit. It's how you're going to react, and are you going to punch back?
I will tell you, it's funny that you use that analogy, because I like to use that analogy too. I'd rather take one big punch from real estate every once in a while than fucking thousands of restaurant punches all day long.
Yeah, the little paper cuts with micro needle. Yeah, it's like...
No, dude, I'll break a leg in real estate before I take 1,000 paper cuts.
No doubt about it. Because you get the one big punch, now you can reassess. You step back and say, all right, now this is what we're going to do. Death by 1,000 paper cuts, it's like you can never get off tilt.
That's a W-2 job to me, dude.
Yeah. And then you're sitting there complaining that you go out in when the sun's down and you go back home and it's still dark.
Still down.
It's like, well, guess what? You can change that.
I know.
You can change that. And I'm not saying like, hey, give up your job, but find a different job. Find something else that you're passionate about. Like, create T-shirts like you mentioned earlier, doggy daycare like you said earlier. These, restaurant owners, these gym guys, these brewmasters. They're so crazy. I mean, it's a good time to see these young business guys get back into the game.
I love it.
Yeah, because that's where we like to, shop, drink, eat, do our thing. And it's around like-minded people. You're not going to find that at Target and all these other big box bullshit stores, right? The like-minded people are right outside of here.
Yep.
Chestnut Hill, Conshohocken, Manayunk, all Philly. I mean, this is where these people are. They're in your backyard.
You mentioned sun up and sundown. That used to be my life in the hospital world.
Whew.
I would go in I was at work by 5 a.m. and I wouldn't get out until way past 6 p.m.
Talk about depressing.
On a normal basis, yes. So I now answer my phone. Obviously, hi, Paul, Jealousy, how can I help you, blah, blah, blah. But most people say, oh, how's your day? Like, that's just a common response. Everybody gives me shit because I sit there and say it's beautiful or it's rainy or whatever, but it's a great day.
Yeah.
And it's because I never used to see the fucking
Outside.
I used to drive there. It was dark. I would get out. I would drive home. It was dark. And I never got to see the green. I never got to see the yellows, the blues, the sun, the clouds, the rain, the thunder, the lightning. So now I'm like, dude, it's fucking 90 degrees outside. A beautiful fucking day. So
now those nature walks that you do without your phone, you're looking at things that everyone usually takes for granted.
Yep.
And it's like, holy shit.
Yep.
Because imagine those rides home after,
And I do them. People, listen, those walks started because I actually work more from home now than anything else.
Yeah.
So it's just getting out of my house. Hey, 10-minute walk, get some cardio, get some sunlight, get some fresh air. Put the phone down and do it. My coworker, Sean,
Yeah, of course.
Right before you came in here, I literally just got up and walked out and came back. He's like, what the hell did you go do? Walked around the building because he could see my feet.
Yeah.
But
it works. I mean, that's the stuff that works.
I just needed it. Like,
Yeah.
before I do something like this, before I go meet a client, I want that 10 minutes, 5 minutes, 3 minutes of just...
Let's get to work. That simple.
Forget what we were doing. Focus on where we're going.
And it's fun.
And do it.
And it's and more times than not, you get a smile out of it, you get a new friend out of it, you get some fun out of it.
Yep.
That's why I'm here. So.
But how can people get a hold of you?
Yeah.
Because we can do this shit.
I didn't know
you're going to miss dinner too.
So my name is Ryan Dolan. I'm a loan officer at My City Lending. And my email is rdolan@mycitylending.com. And my cell is 215-432-5957. Where you can reach out to the guys at the show. Anything you guys need from a refinance standpoint, investment standpoint, mortgage lending standpoint, or any real estate advice for that matter, just please reach out. Be happy to have a phone call. It's free, it's easy, and it's fun.
Right. I love the fact that you're not just like a loan officer, you're actually an investor, you're actually an entrepreneur, you're a landlord.
Oh, I practice what I preach. Dude. I'm not just out here selling stuff. I practice what I preach, yeah.
I do joke that I'm a stay-at-home dad that wears a couple real estate hats.
Which
but
I
you
love.
Quite literally wear almost every real estate hat you can do.
Because guess what? I'm not going backwards. I'm moving forward. I'm only going forward. So
I think we got to get you a couple different hats with all the different things on it. And that could be like your little wallpaper on the back.
I love it.
But yeah, man, this has been a blast. I really do appreciate it.
No, thank you very much for having me.
We're going to have you back on again.
Awesome.
Because actually, sorry everybody, we might cut this one into 2 anyway and have him back on for a third. Because this has been, dude, this is awesome. As you say, I don't even know when I hit start recording because you just started talking and everything was great. And I was just like, oh, I want to capture this.
Well, look, I hope everybody enjoyed it. It was really awesome. And I would love to come back and keep up with the market. We'll talk about whatever's new.
Awesome, my man. Any last advice, any last insight or future crystal balls you want to put out there?
Listen, start now.
Start
now, right? Don't wait. Start now. Get your credit in order, your income in order. If you don't know where to start, just call us. We'll help you out.
I love it.
That simple.
Unfortunately, that is the end of this episode of the Atomic Real Estate Show. There will be more actionable atom-sized bits of advice that will be free for the taking on our next episode. Be sure to tune in next week. Thank you again for all of our listeners. Ryan, you've been amazing. I don't know what other word to put into this. This has been a Direct Subs production. Check them out at directsubs.com, focusing on bringing contractors and homeowners and investors together in the Philadelphia area. I look forward to hearing from all of you in our comments. Please remember to like, share, follow, subscribe, wherever you choose to listen to the Atomic Real Estate Show. And yes, let's all be 1% better today.
Love it. Thanks, guys. Cheers.
Yay!
If you enjoyed our episode, please consider supporting the show by rating and reviewing the podcast. Also, check us out on Instagram at Atomic Real Estate Show to find out when new shows drop and to participate in our community Q&As. The Atomic Real Estate Show was brought to you by Direct Subs. Direct Subs is the #1 place for real estate investors to connect with local contractors for their flips, rentals, renovations, and new construction projects.